and welcome. I'm Maloni Bhatt. The last 2 years have reset the ways in which we live, work, and do business. If anything, it's forced us as people, businesses, sectors, job functions world over to transform and reassess. The core question being, how can we achieve maximum growth sustainably and with inclusivity? How can we build a better, more equal world, even as we navigate the impact of war and strife and successive waves of the pandemic? What will be the role of leaders and policymakers? These are questions being deliberated in boardrooms the world over. And it just makes sense that it be our focus at ET India Inc. Boardroom this year. Spread over 5 days, we have 5 tracks. Consider it your deep dive into questions and issues pertaining to the economy, ESG, financial inclusion, automation and digital transformation, and startups. In each of these tracks, there are multiple sessions where top corporate decision makers across various sectors of Indian industry will outline their agendas, define challenges, and set out strategies to drive India's economy and growth. Growth for all. Growth while improving the company's bottom line and is sensitive to our societies and our planet. We're happy to have Commercify, a B2B e-commerce company, as our associate partner, and global management consulting firm Bain & Company as our knowledge partner. At the heart of today's discussions are the big challenges confronting the Indian economy: how to create jobs, ensure sustained foreign investments, and how to drive consumption. Stay tuned.
Hello, welcome to ET India Inc. Boardroom. On this panel, we would be discussing the challenges that confront Indian economy at this juncture amid global headwinds. And we have with us Dr. Surjit Bhalla, who is the Executive Director at the IMF for India, Bangladesh, Bhutan, and Sri Lanka. Thank you, Dr. Bhalla, for joining us for this chat. I want to start with, the geopolitical situation globally has, has increased challenges that are before, economies like India. In terms of inflation and in terms of other issues that are likely to, confront the economy. How do you see the economy going forward, and what are the policy interventions do you think uh, that could be required going forward?
Look, the world has been, to put it mildly, in a mess for the last, starting with the COVID, January or February 2020. And no sooner were we getting out of it that the conflict in Ukraine started. And actually these two events, and this is now 2.5 years and counting, these two events do provide a perspective on the two issues that you've asked about: inflation, and then I will talk about growth. Now, and inflation around the world is at 45-year-old highs, starting from the 1980s, right after the second oil price shock. And then inflation came down, interest rates went through the roof. I think the US bond yields at that time reached 14%. To put it in perspective, bond yields today, US bond yields today are somewhere close to 3.5%. So that provides you with a perspective on how much the world has changed in the 45 years, and dominantly it changed with regard to inflation. Worldwide, including India, inflation rates came down, and such that in 2019, before the pandemic, the median inflation rate in the advanced economies and the developed economies, the difference was at its lowest ever, about 1 percentage point. You now have, as I mentioned, that inflation has gone through the roof practically everywhere, relatively a lower roof than historically, but nevertheless a sharp increase over what we've experienced for the last 25 years. What caused this is a very important question, and the correct answer is dependent on our analysis of what happened. Never before in world history, and I'm talking since 1945, when monetary policy, fiscal policy, and globalization started to happen. Actually, globalization really started to happen around 1980. But nevertheless, since 1945, so that's close to 80 years, you've never had an occasion where you had both a supply shock, which was the COVID era, and a demand shock simultaneously across the world, which is the emergence from the COVID shock. So, everybody is right and everybody is wrong in terms of how to attack this inflation. We have no benchmarks to go by. We have no theories to go by. We have no policies that we can rely on to go by. The world just exploded, and supply takes a little bit of time to come on board. And before you knew it, that China went into a rather unexpected COVID lockdown shock. So, we in India have had a lot of experience with supply side shocks, in particular emanating from food as well as from fuel. And it is for that reason that, a monetary response, and I've wrote for a long time that, it is not at all clear, maybe it is clear that the correct monetary response to a food supply, to a drought, is not to tighten monetary policy or to tighten fiscal policy because of the resulting food inflation. Now coming to, so I think there are lessons to be learned from the Indian experience of the last 50 odd years. Then you have, in terms of growth, now all countries have been affected, but interestingly, and we at the fund, and the analysts at the fund who are looking at this on a constant day-by-day, 24/7 basis, and their report, the IMF WEO, World Economic Outlook, just came out. And in that, India is slated to grow. The growth rate has been lowered from something close to 9% to now 8.2%. So there has been a lowering of Indian growth, along with lowering of growth around the world. But we are still the fastest growing economy, expected to be this year, next year, and for the year after. So I think, and that optimism, well, I won't call it optimism, that forecast is really being bolstered by the evidence that we see in India. You just had the GST data come out yesterday, in which showed a 20% rise in tax revenues. Now, 20% rise in tax revenues is on top of already a nice increase last year and the year before, suggests that real activity is bounding back, accompanied by inflation, if you will, but is bounding back. So I think perhaps we can go into other aspects of the Indian economy later, but the signs are that India will do relatively very well, and absolutely also compared to our last 2 decades will be at the upper end of the range. Some of it is a function of the fact that we had catch up happening. But I think that a reasonable forecast, given that the world doesn't fall apart further, a reasonable forecast is that India will grow something 7.5% plus minus 0.5% for the foreseeable future.
Sir, if I could just come in, with concerns around inflation, we saw the budget come about in February, and it banks a lot on, capex recovery. Government itself has, provided a huge boost to capex, and it was expected that, and there was this all-around optimism around, private capex kicking in. Uh, with inflation now, being where it is, and the expectations that it could go up further, uh, do you think that pitch seems to have quite a bit?
No, look, capex, when the expectations are for capex recovery, both in real terms for a reasonable advance. And I don't see how, if inflation has gone up because of what I discussed, if I'm right, because of really shocks beyond our control and world shocks, that does put a damper on investment, but doesn't reduce it to zero. Now let's look at agriculture, that I think that's a sector to watch out for in India, that, basically wheat and rice, as well as trade agreements with Australia, more trade agreements forthcoming, perhaps with EU, perhaps with the US, exports growth. There is a structural change in the Indian economy, which has occurred over the last 4 or 5 years, and was accelerating, is accelerating, but is accelerating at a lower pace because of this recent shock. I don't, if you're an investor everywhere around the world, you're being a bit cautious. Absolutely fair. But I think allocations of capital have to take place, and investors will take place, and investments will take place. And I would be very surprised if India is not the most favored destination. So this is both from investors in India as well as from investors abroad. We've seen, I just discussed the tax figures on GST. And I think, and that was most of it was for March. That was right at the height of the crisis. And the crisis is continuing. There is hope that it will end, but I think all the signs are very, very relatively very positive for India.
You mentioned about, how structurally the economy has changed. In the past, in 2013, when the US Fed went in for tightening, Indian economy, Indian market faced a precarious situation. Do you see, with all the structural changes that have come about in the economy, how well placed are we to sort of withstand such a shock going forward, which, of course, is impending now?
We are all studying this. And one very positive sign for India in this current situation is the currency market, where, European currencies, Japanese yen, even the Chinese yuan, Indonesia, Brazil, etc., their currencies have depreciated a lot more than the Indian currency, given the size of the shock. So I think, there is, and that is reflecting the changed Indian situation, and that it's likely that the taper tantrum of 2013, when inflation rates entering into the taper tantrum, India's inflation rate was in double digits for several years running, and the exchange rate hadn't adjusted. That was a real, genuine crisis of confidence, of crisis of monetary and fiscal policy, crisis of growth. And this situation is very, very different now. We have more than $600 billion of reserves. We are losing reserves at a lower rate than most countries are. So, no, I think it is time we acknowledged that structurally, India is very different than a decade ago. And this structural change is because of economic policies, not international events. International events, as we've just discussed, have been quite negative over the last 3 years. And look at export growth, we've done fantastically well. Look at tax revenue, personal, corporate, GST, we've done fantastically well, better than we've ever done. So I think, comparison with 2013, because inflation at that time had been going at 10% plus for several years versus now, when inflation has been dormant and has gone up now because of supply constraints. I don't think it's a valid comparison or relevant benchmark to look at all. This is a changed India, and it is a change because of the large magnitude of economic reforms that have taken place over the last 7 years. You have, whether it is the GST, whether it is your policies in terms of interest rates. Back in 2018 and 2019 and 2017, we had the highest real policy rates in the world. And we had the MSME crisis, all the rest of it. So this is a very different, situation, a very different economy, a very different India.
So there's been some commentary about, the central bank reserve, RBI being behind the curve in view of the inflation. And I want to just come back to, your first comment you made on the situation and how it should not be tackled. And people should take an example, leaf out of India's book. What is your view on this, commentary which is sort of coming about on the Reserve Bank's action?
Yeah. First of all, I'm here in Washington, and behind the curve is a term that journalists and experts apply at a moment's notice to any economy in the world. And when I ask them, like I'll ask you now, okay, so what should we do? Then the answers are a little bit hesitant and they're not so much forthcoming. I'm not blaming you. This is the most common refrain.
Sure.
When in doubt, say, the monetary policy is behind the curve. I just think it really, if the monetary policy in India is behind the curve, in Europe it's behind the curve, in the US is behind the curve, Latin America is behind the curve, etc., then what we have is the whole class failed in terms of its policies over the last 3 years. Now, one hint at how the whole class failed and India didn't, and which is I offer to anybody willing to listen, that think about the following counterfactual. Let us say the world had the pandemic, absolutely, as the world has had pandemics in the past, but did not go through lockdowns. Okay? Now, what would happen? And there is no evidence that I've yet seen which shows that lockdowns either diminished the number of cases or diminished the number of deaths from the pandemic. We gained nothing from lockdowns, and indeed, there's a reasonable argument that we lost, that there were more deaths and more cases because of the lockdown. But continue on the counterfactual. The world has had pandemics for centuries and has refrained from even a local lockdown. What used to have, the term quarantine is when ships used to come and the sailors used to be on their ship for 40 days. That's how the world coped with it. And it didn't mean that everybody will stop working. So that's where the supply shock came in. What we had during the pandemic was not a demand shock, was a supply shock. Okay. Now, so demand fell because the supply was not there, but the supply is the one who caused it. So in my counter example, if we didn't have a lockdown, there wouldn't have been such a big supply shock. Second, and the supply shock would have been distributed and we would have gone on. The growth rate would have been a little bit down, but not much. And then there wouldn't have been this humongous recovery simultaneous. So therefore, you would have had the inflation of the same order. So think about it. That's what went wrong. One of the reasons why India is doing better than most countries, we were one of the first to enter the lockdown, and we were the very first to emerge out of it. In 3 months, our policymakers realized that this was a mistake. It took other countries a long, long time to come to that realization. There are a few countries like Japan and like Vietnam, etc., which didn't go into lockdown, but most of the rest of the world, followed blindly into the path that was first staked out in Wuhan. The lockdown in Wuhan occurred on January 22nd. Most of the analysts, most of the experts applauded the lockdown, recommended for everybody else. So that's where we came from. And that's the cause of this and this is before we even begin to talk about the crisis in Ukraine. This is let's recognize for what it is. I don't know I certainly don't think the RBI under the able guidance of our governor, Shaktikant Das, has been behind the curve at all. Matter of fact, it's been very intelligent monetary policy. And I have, criticized him in the past. I've criticized practically all. But I think we need to now recognize that what is happening in monetary policy in India and fiscal policy is very different than what we have experienced. Look, fiscal expansion was one of the least. And I remember the same people who say we are behind the curve were then saying, oh, you should be spending a lot more. How are you going to take care of the poor? And so on and so forth, and all the migrants. And we didn't quite acknowledge that the government had a different plan in place, which was to provide food for all and provide free food for the bottom 2/3 of the population. So, India staked out a different path than many other countries. So let's not judge or comment on India that it acted the same and what other countries should be doing. We are not, so in a single word, we are not behind the curve.
Since you mentioned the food program, and I want to ask you about the, your paper with Dr. Vermani and Karan Bhasin. Uh, you know, food subsidies or direct food, providing directly food, is this the most effective way of, ensuring at least a minimal consumption to the poor? And is this the most effective way? Could, or are food coupons or direct transfers much more, would they be more effective?
Look, this is something I've written about, studied, commented upon, must be close to 40 years. And I've been a big critic of Narega and a big critic of the PDS. Let me remind you that it was in 1985 that
You
Rajiv
even
Gandhi.
criticize right to food, if I remember
Sorry?
right.
Sorry?
The food, the right to food, the national
Yeah,
food
yeah, I'm
security.
coming to that. Absolutely. I'm not, I said I was a big critic of all of this. So why has my position changed? And in which manner it has changed and where should we go? So first, I want to point out that the Right to Food Act came before or at the time. Let me just go back to 85, and Rajiv Gandhi said that only 15% of the money meant for the poor, which was now just the PDS system, did not reach the poor. Only 15% reached the poor. So, in other words, what he left unsaid, but what was well acknowledged, is that 85% of the money was leakage, and almost 100% of that leakage was corruption. Okay, and you had the TV channels had all kinds of shows as late as 2009, 10 about these trucks leaving the godowns to go to liquor stores and what have you. Okay, so it was in this context that the PDS program evolved and the Right to Food Act came. So, and at that time I said, we need to plug the leakages, acknowledge, and that there was a better system, which was transfers to the farmers and cash transfers to the individuals. So you give it to the producers, you give money to the individuals rather than the government buys the food, puts it in a ration shop, then we organize people to come to it, etc., etc. Very, very inefficient program. So what happened now? Two things happened, or perhaps three. First, you had a government in place starting right at the start of the Right to Food Act, implementation of the Right to Food Act. The Right to Food Act was passed in 2013. The Modi government came to power in 2014 May. And from the beginning, and remember its origins, was anti-corruption. And that was what its mantra was, and it has lived up to that we will decrease corruption through public policies. And I was involved in meetings where, government meetings with other experts, where we all said broadly the same thing, acknowledged that the food system, the PDS system was not working, was corrupt, was inefficient. Okay, so the government started implementing the 2014, the Right to Food Act. And its concentration was on greater delivery of this. And I think, the land reforms, the agricultural reforms, etc., are all part of this entire package of reforms. And so we've seen what has happened with the land acquisition. That reform wasn't allowed to go through. The reform that everybody in India had supported, including the Congress party, including in Punjab. The report was written for the Punjab government, which advocated exactly the same set of the agricultural reforms as were implemented or in ordinance by the government, then became a law, and the rest is history as to. So if you should have shows on why were people opposed to the agricultural policy. Okay, so what we have then is the pandemic came. And by that time, the government had already it was stopped in other areas, but it continued to make the PDS system very effective, making the best of what you've got. And the various, then when the pandemic came, they gave them an extra 5 kilograms of wheat or rice free to every person. And we saw when there were TV interviews during the UP election as to how universally people had acknowledged that this system had really worked. So we have now an efficient PDS system, and it worked extremely well. Now your larger question, where do we go from here? And I think that question has to be answered in the context of what we do with farm policy, what we do with MSP, etc. And all of us, the critics as well as those in the government, those who are opposed to MSP being removed and those who believe the MSP should still be in place. I think those who believe the MSP in place is a smaller, much more vocal and much more politically active constituency. But that's politics for you. So it doesn't mean, so I think, yes, we should look at more efficient ways of delivering incomes to the poor. Absolutely. You will not find me arguing when a policy is both equitable and efficient. But we are not there yet, but we must give full credit to the government and the bureaucracy, which I have also maligned many times in the past for its inefficiency, for really rising to the occasion and being an example to the world as to how the pandemic should have been handled and how it was handled. I hope I've answered all your.
Yeah, so just in terms of policy interventions, what more needs to be done to reduce poverty? And is growth the only option, or redistribution is needed through bigger social benefits? And also in terms of when we talk about larger social benefits, does India have the fiscal capacity to undertake such larger programs?
Look, the large, first of all, it is the duty, dharma, of every government to redistribute towards the lower sections of the population that all governments have to do for political reasons, ethical reasons, moral reasons, religious reasons, whatever reasons, all roads point to that you must do that. Now, what are the ways in which you can help the bottom 50% of the population, give or take? Look what this government did, which was never been done before. And you should be asking the question as to why didn't governments prior to Modi do this? Sanitation. Okay, the sanitation came in 2014. Started in 2014-15, and that's it doesn't affect people like you and me, but it affects the poor, the bottom half, the bottom 60, and women predominantly. And where were you all before until 2014-15? So that was a huge program. Money wouldn't solve it. You had to go ahead and build sanitation, which is a public good. And finally, that was delivered. After that, another really important, chulas, another policy that really helps the poor, and especially the women. It helps their health, helps everything. So that's another policy that then you had now piped water being supplied. Electricity, there's no place without electricity now. And the power cuts are less frequent. You possibly have more power cuts in Washington. But, so those are the avenues by which you help the bottom 50%. And this government has been very specific and very disciplined in providing these benefits, which should have been the most obvious benefits, but what weren't in the last 65 years of our independence. So I think we all need to do a little rethink of what happened before and why weren't these policies undertaken. And I don't see enough questions. The questions are all, obviously, we all look to the present and we all look to the future, but really the present is an outcome of the past and the future will be an outcome of the policies of the present. So I think, so we can, remember, sanitation, money you spend on sanitation, health insurance, money you spend on roads, etc. How much fiscal deficit do they affect? It's, you won't even notice it. So I think, yes, we need to look at, in a holistic manner, our policies of redistribution. Food is an important component, especially rice and wheat and pulses. Very imaginative, very, we did an analysis which you report in the paper that, sadiyon se, for, ever since we have been collecting data in the NSS, that the average consumption of rice and wheat is 10 kg per person per month. And, people have basmati versus the other rice. That's a separate, but the point is, that's the physical quantity. And what this government did was that the PDS, the Food Security Act, etc., only allowed 5 kgs per person, including a poor person. Obviously, the rich didn't get it. And this government then went ahead and doubled it to what? So therefore, you wouldn't have a requirement of either rice or wheat or pulses even. So about 1 kg of chana, maybe you didn't get the pulse you wanted, but this was a superb, really, it's a lesson for the entire world as to how to handle. So I think the issue you're raising, we have to think about what are the policies once the pandemic is over, and once we are a richer or less poor country, which we are. We are now a lower middle income country. Why should we have the policies when we were absolutely poor? That's our recommendation in the article, that we should raise the poverty line. The poor will always be with us. The bottom 50% will always be with us by definition. So we have to, as I mentioned and emphasize, we have to construct policies to efficiently redistribute to the bottom 50%. What those policies are subject to change with development. And we become low middle income. When we become a middle income country, the policies will be different. And when we become a rich country, the policies will yet be different. But this situation of helping or financing and redistribution will be there forever and should be there forever and will be there forever.
Thank you so much for taking out time, sir. And
Yeah. Thank you very much for having me.
thank you so much for tuning into ET India Inc. Boardroom. Stay tuned for more.
Hello and welcome to ET India Boardroom. On this panel, we will be discussing drivers of future consumption in India. Our panelists are Kamal Bali, President and Managing Director for Volvo India, Naveen Soni, President for Lexus India, and Vishal Datta, who's the Vice President and Head for Modern Trade at LG Electronics. And also a welcome and thank you to the viewers of this panel discussion. So private final consumption expenditure, which powers 60% of the GDP in India, is expected to grow into a 6 trillion opportunity by 2030. This consumption growth is on back of a 1.4 billion strong population that is younger than that of any other major economy in the world. Also, very importantly, household savings have historically been high as thrifty and cautious Indian families put away more than a fifth of their income for a rainy day. And this buffer provides support to domestic consumption expenditure even through challenging cycles in economic activity. So given the centrality of domestic consumption to our economy, this is a key topic for any business leader. Let's dive into our discussion and explore the main facets of consumption and its growth. Kamal, I'm going to start with you. We are coming out of a couple of very strange years. Why don't we get through that before we turn our attention to the future? What's been your experience in overall consumption level with the two successive COVID years?
Yeah, so thank you, Nikhil. Thank you, Economic Times, for having me on this panel. Pleasure to be here, and especially Nikhil, seeing you after a long time. The pandemic actually struck each one of us, I think, with shock, disbelief, and confusion initially. While I must admit that it did teach us a number of lessons on resilience and adaptability, and on which all of us did very well, I think most of us. The toughest part has been losing your near ones and dear ones. And we were all caught many times very helpless and unaware, And so I think this was one big challenge, which I thought we saw that happen. But when it comes to business, things did return quite fast with each lockdown. This is also because in our case, in construction equipment and commercial vehicles, a lot of our businesses are entwined with infrastructure development and road building, where authorities kept on pushing on the pace during even this period. So I think that was one. We actually did a lot of new things. We forged new partnerships, which we never would have imagined before the pandemic. And also, I mean, the way we looked at our suppliers, customers, and I think also employees too. I think the ability to come together remotely and keep critical businesses running was something everyone ensured it. So we strive to protect our suppliers in this period from any cash flow challenges that they may have. And I think this has further built really enduring relationships. Of course, we must remember that this was also possible because we already knew each other in the past. So digital tools at workplace have been a norm. And I think a few things which changed dramatically was the e-commerce gaining ground and had key influence on trucking and transport, for instance. As we see e-commerce, telehealth, online learning, online streaming, this has all accelerated in months to a level that would have taken, to my mind, years. And I think you would know better than any one of us that e-commerce numbers are actually surging to almost 2030 levels already, what were projected. So it so happens many organizations, including us, have also declared our global sustainability mission. I think this also, is directly a key factor as a consequence of uh, of this pandemic. To be very frank, I think this pandemic has been like a pause, reset, and a fast forward button. Pause because we were all stuck. We were, for some time, we didn't know what to do. We went into a state of introspection. Reset because we started reimagining what could be the future and how to deal with this new reality. And then fast forward because I think thanks to digitalization, digital transformation, and some new ways of doing things, people have all come to understand that we can really do things very, very fast. And I think this has also led to amplified acceleration on innovation, startups mushrooming, forging new collaborations and partnerships, new ways of working, agility and adaptability. I think these are some of the key words which have really come up, Nikhil, and I think this has really changed the way we have been doing things. Of course, the pandemic also has fast-tracked the future of mobility. My business, I think, in terms of what will it mean, the mobility, what does it mean in terms of alternate energy carriers, new transport concepts, whether it is the last mile connectivity or hub to hub, automation, connectivity, and the compelling need to find sustainable solutions. So I think it's been a very, I would say, roller coaster sort of a journey. On one side, a huge shock wave, and then opening up plethora of opportunities, which might have taken 8 to 10 years. So I will stop there, Nikhil, just to share my perspective with you.
Indeed, and thank you for that, Kamal. Vishal, just in terms of what Kamal ended with, both a massive shock, but also opening up of opportunities. Now, as you see it from a consumer durables and mobile phones view of the world, what's been your experience over the last couple of years?
So yeah, I'll start. Actually, the first couple of months, we did not know. That what's actually happened, and suddenly there was a lockdown, and everything was shut, offices were shut, stores were shut, we are all stuck at home. There were very, very strict rules in the society where the maids are not allowed, right? No service technician could visit you. There's a reason I'm saying that. I'll come to that in the end about the service technician. So obviously there was a pent-up demand which started to be created for consumer durables. The biggest beneficiary of this was mobile phones and laptops, because when things opened up slightly, there was a lot of online studies which started. There was work from home, so suddenly there was a demand for laptops and mobile phones. Yeah, the smartphones really picked up. Laptops, it more or less became compulsory for the family members to own a laptop each. That created a massive demand, and obviously the laptop industry, which was not doing well, surprisingly, it was a boost for them. Now, when you look at consumer durables, when people were stuck at home very badly, and of course, the decent salaried class had enough money on hand, suddenly, the consumer demand shifted. So because the maids were not allowed in metro markets or even smaller markets, the demand for washing machine increased. So all this, north, where we say that, north typically is not a very big market for fully automatic washing machines compared to south. And the logic always given is that the maids are cheaper and somebody who comes and cleans your clothes for 400, 500 bucks. Suddenly there was a massive demand for the bigger size washing machines, and fully automatic. So suddenly that changed. Now, in terms of refrigerators also, because there was a lot of limitations, people were not allowed to go out of their homes. Maybe, in buildings or societies, wherever we lived, the bhaji wala was coming and people were buying once in a week. So suddenly there was a demand for larger refrigerators. And suddenly people all sitting at home having nothing to do, they realized that, bigger televisions. So the demand for consumer electronics really increased once the lockdown slowly started to open. Of course, there was a long lockdown, work from home, but it started opening the stores for some time. That's the time consumer durables really picked up. Here also, brands with strong infrastructure in India benefited. So for example, a brand like LG, which has massive factories, own production in Pune and Noida, helped because suddenly, there was a huge demand, global demand. China, which is the biggest supplier for raw material and finished goods, found it very difficult to, meet their own demands.
Yep.
As a result, most of the brands which are dependent on China and other countries had nothing to sell actually. There were many trading organizations which were actually buying their products from, and big names. I don't want to take name, but very big name, who were actually buying their products from China and selling in India. Of course, they were not able to supply. So the benefit of having large factories, and there was once a discussion that, that whether it really made sense to have your factories in India, especially with the kind of some of the benefits the others had abroad, turned around. So factory, well, of course, the issue remained that the factories remained shut because of COVID, etc., etc. So whatever stocks which was there, and normally consumer durable, they keep about 2 months stock to trade partners. That really increased. So that flush out happened. Now consumer durables typically, market moving towards, large retail formats and online. Now what happened once the lockdown did not, it was not removed, but with restrictions when they opened, the smaller retailers benefited because then people did not go far. I mean, they went to the closest store next to their home to buy products. So many of the distribution market, which is kind of struggling, got a lease of life, So for example, if I live, say in Karol Bagh or wherever, I would just walk to the closest store. It didn't matter to me whether he was a big store or a small store, and I picked up stocks. If availability became one and reach became two. So that also helped really this channel, improve. Having said that, the biggest challenge was the cash flows. Suddenly if the business shuts for 2 months, yes, there the organization, especially LG Electronics, we really looked after the trade partners and we helped them come out of this mess. So this is how the first lockdown was. And of course, again, now because people were sitting at home for a longer period of time, especially families which would go abroad for a holiday, or families which would often go for at least 2 to 3 holidays in India, or movie buffs who were actually spending close to 700, 800 rupees per person for a ticket. These are the kind of guys who grabbed large screen TVs. So suddenly, demand for 65 inches and above really went up. 75 inches went up. The most expensive 1.5 lakh refrigerators, I mean, there was a demand. So it helped, and a brand like LG, which has own factory, own infrastructure, we were able to meet the demand to a large extent.
Completely. Thank you for that, Vishal. Now, the part of India that you sell your products to is indeed, kind of some of the most privileged and affluent folks. They would have had also, a number of the constraints that was universal. But from your perspective, what was the consumption story for the last couple of years?
So it's as predicted. Luxury car market, which I represent, went through a terrible time in terms of slowdown in the industry. So from a peak of say 40,000 units that were sold in say 2018, it slipped to something like 20,000 units across the country within no time, within 2 years. So which was a natural outcome of what I would say is the pandemic effect that is happening. But what happens thereafter is another story, because after that, what do you see from the mindset change and also the pent up demand? So pent up demand, or between these COVID 1, COVID 2, COVID 2, COVID 3, and maybe COVID 3, and now waiting for COVID 4. There is a temporary phenomena, which is kind of a blip that occurs for a brief period, but that's only linked to a short period of time. It cannot be sustainable for a longer period of time. But what we have found is the mindset change that is accompanied with this. What COVID has done to the mindset of the people is that that what we like to call as the YOLO effect. You only live once. That's pronounced loud and clear in the minds of the people who can afford. Basic needs, of course, are very important to everybody, and it's equally important to every class of social strata of the society. But these people who are assured of the basic needs are going out and spending. It's between these waves, they look for opportunities to hire aircraft to go to destinations that they wouldn't have traveled before. They would like to spend. India is basically a saving economy, as we all know, but things are changing. things are changing to an extent that this 20,000 volume that we had gone down to might be touching maybe 37,000 by the end of this year. So we are back to where kind of a fill back the system, for the pent up demand. This change of the mindset is more important. People are willing to now say, I have only one life, I have to live it up. This is one aspect that is causing a big change in the business environment that I represent. That's my limited point. Yeah.
Naveen, and I'm going to actually pick up from there and ask all of you to talk about this in a little more detail. Naveen, maybe I'm going to ask you to elaborate first, and then I have Kamal and Vishal also chip in. But a couple of years ago, we at Bain did some work on the future of consumption in India for 2030. And if we talk about not just the next few quarters, but over a 6 to 8 years out period, there's a fundamental shift that's coming. The generational cohorts that were in the peak, who were in their peak consuming years during the past 2 decades, the 40 somethings and the 50 somethings of today, they were still born between the 1970s and the 1980s.
Yeah.
And people like us, we still carry some memories of a more constrained era where consumption options were fewer and thrift was of greater value. Over the next decade and more, one of the biggest changes will be the coming of age of the true children of liberalization, people who have now the earning power and were born after the 90s. Now, that class of consumers will have grown up in a more open and confident India. They won't be carrying the same cultural or economic baggage of their predecessors. And that's the generation, on the move, which aspires to a materially better life, backed by an ability to spend and make that a reality. So how bullish are you? Your segment, of course, is at the top of the income pyramid. And then I'd love to hear from Kamal and Vishal also.
Yeah, sure. So basically what we've been seeing is that, the economic projections that the government is talking about and working towards it, I'm sure they'll be realized soon. But important thing, what you have raised is is also linked to the point that I was making earlier about the mindset change. People their start of point is different. They're starting off at a different point. Today, the younger generation wouldn't mind leaving a job if they don't like doing the job without even having a confirmation of where he'll get the next month's salary from. That's the change of the mindset that is happening in the society, whether it's generation Y, Z, B, whatever you want to call it. But their starting point is very much different, and they kind of have their own priorities. I'm sure Vishal has enough and more stories to talk about how they are buying mobile phones beyond their salary class, etc. So these marketing definitions of marketing demographically segmenting the market or economically segmenting the market will all go for a toss, because people's spending capability is one thing, but people spending ability or intention is very, very different. So that is there. India, I think, from the auto space, and especially from the spec segment that I now represent, has a unique opportunity, because in India, 1% of the country holds 73% of the wealth. Now, these are people who used to buy vehicles earlier in the segment that I represent, but things are changing. Why they are changing? Because people are wanting to experiment, grow, aspire, get into newer areas, etc., etc. So, from that point of view, for example, in our market is just 1% of the total market is luxury car market. If 30,000 cars are being sold in luxury car, there are 3 million cars sold across the country in the mass market. So we are just 1%. China is 14%. So I'm not making a comparison to China, but if you look at what happens there, can happen here also. Given that that the propensity to spend, the intention to spend, the ability to spend is likely to go up, and people are willing to experiment. People are wanting to go out and say, I want to express myself. It's also partly driven by the fact that they've seen miseries of the worst kind, they've seen losses of the worst kind, which makes them very uncomfortable and say, okay, listen, I have only one life, let me live it up.
Kamal, you have a view on the demographic shifts and how that's going to change demand?
Absolutely, I think, and I completely agree with your earlier point that people born after 90s, and I think after the liberalization, they are going to hold the key. But I think I personally believe that we are at the cusp of a socio-economic transformation not witnessed at least in the last 50 to 60 years very, very clearly. And I believe that India will remain for the next 1 decade at least amongst the fastest growing economies and an aspirational economy. And I think, I say this because of a number of factors at play. I think number one, I think there's a huge rebalancing of global value chain that is happening, especially in manufacturing. And you will see India's manufacturing share in GDP going to grow dramatically, which we all have been aspiring for last 20 years, but the needle hasn't moved much. It has always remained between 15 to 18% of GDP. But you will see over the next 5 years that this will cross 22% to 25% with almost $4 trillion of manufacturing getting rebalanced, and India is going to be one of the main beneficiaries. And why I say manufacturing? Manufacturing is very critical to creating that multiplier effect on jobs and income. And this will set off a virtuous cycle of growth and therefore consumption. And this is one part. I think manufacturing is going to be one key driver. The other thing is, I think some of the government policies, I have to admit, are very, very positive. Things like PLI scheme, things like ESDM manufacturing, which has never happened in India, investments for ESDM, battery manufacturing, lower tax regime for manufacturing, the startup ecosystem, which itself is creating so many jobs. And then, of course, poverty elimination drive I think which is happening across states. All this, Nikhil, is leading to larger consumption, and that kicks off a very, very good consumption, this virtuous cycle of people consuming more, therefore demand going more, and all of that in a big way. And then, of course, with connected solutions, with digitalization, I think the gaps between regions and urban rural dispersion will narrow dramatically. And I think this will also add to tremendous. So to my mind, I'm very bullish on India consumption story. I believe the stars are finally aligning, and all factors are converging towards a story which will be really interesting to follow. Yeah.
And Vishal, some perspectives from you, given the much wider part of the country that your product range caters to. How do you see that growing and changing over the next decade?
See, growth is now a done thing, especially for brands which have strong infrastructure in India. Like I said again, because of this COVID thing happening in China, a lot of manufacturers who are dependent on China would have started to struggle now. Maybe Jan, Feb, March, they were okay. They had good inventories to sell, but now suddenly they're going out of stock because China is not able to, you're not getting the raw material from China. And also, I think what has now happened is that many organizations have actually learned that going forward, work from home is not a bad idea. So a place like Mumbai, where I am based, I've seen many of the offices people have vacated their offices, larger offices, and people have moved to smaller offices. Plus now it's no more of coming to office every day. Even large organizations are saying come once a week twice. So that has continued to have a demand for durables. Now gadgets have become very basic. I mean, people are trying not to be too dependent on the maid servants, etc. So suddenly, there's a huge demand for dishwasher. And it still continues right now. There's a demand for new products. Dishwasher is coming in. People are getting very health conscious. So, people are changing. They're wanting to buy the best water purifiers in the market. And then last 2 years, we have missed out on the summer season. Now, summer season, typically the compressor product demand really goes up, which is refrigerators and air conditioners. Now, refrigerators has slightly changed now, and it's more or less become 12 months. But AC still, a large part of AC is sold during March, April. So this year, we've been able to witness that. So this year again, some of the brands were very worried that what if, when is COVID going to come? Because in the beginning of the year, people said COVID is expected to come again in April, etc. However, COVID came in April and January and went away also. But now what has happened is that March and April has seen some crazy demand for air conditioners, which is really taken care of the entire year. That's the kind of demand which is. So I think from the manufacturing point of view, it is a question of strength now. Who's able to meet the demand? So there is no challenge in terms of any demand going down. In fact, it's going up. The only thing is consumer behavior is changing. So earlier TV went at 32 inches. Now TV, the entry level model for a television was 32 inches. Now that's moved to 43 inches. 32 is like probably it'll become history the way things are. Similarly, semi-automatic is coming down. Now fully automatic contribution is going up. And from that point of view, the ASPs are going up. So consumer durables actually right now.
Indeed, and I'm going to stay with you, Vishal, to ask you to say a little more on the next theme. Joan Robinson, many years ago, or many decades ago, actually had famously quipped, "Whatever you say about India, the opposite is also true." So, given the disparities that we still see across regions, across urban and rural, and across different types of cities, whether it's from metros and large cities to smaller towns and urban, what remains the biggest relevant differences in consumption pattern? And I mean, where are the differences being accentuated further? Where are differences going to be converging? So, some thoughts from you on this, Vishal, before we ask Naveen and Kamal.
I think the biggest, like I said in the beginning also, so there are certain products in India and the rural market which is normally, which was not really selling. Like for example, washing machines. I gave you an example. Dishwasher, washing machine, because of availability of cheap labor, you have domestic helps coming in. Now with this happening, and people themselves, it's not only about the government law, it's about a lot of people, declaring self-discipline and saying, okay, we don't want maid servants coming, etc., and all that. So that has really helped growth in terms of products which were basically earlier called the metro products. Like for example, a microwave. Microwave, usually they say, okay, in a metro city, husband wife working, both of them go out. They need to come home, they need to cook food. So microwave, which was just used to warm foods, is now become a gadget to cook food also, because it does very good baking and stuff like that. So that is one change, and that was again a metro kind of a thing. Now that's gone back to rural markets also. Now, obviously, there are people who are still scared of going to movie halls. A lot of them, Now they have created their own home theater rooms in their own homes. They've bought large screen TVs, and OTT has helped. The content in OTT seems to be far better than the kind of movies that are released today. So people are more than happy, watching, buying large screen TVs. So the contribution of large screen TVs has really gone up. That's one difference, and that's across the country now. It's no more a metro or a non-metro, rural or urban. It's all about affordability. If you have money, people are going for the large size.
Kamal, your business cuts across, different types of vehicles, passenger or commercial, as well as, kind of infra-related businesses. What differences do you see across regions or, different parts of the country?
Yeah, I think, Nikhil, what you said is absolutely true. India is indeed a land of contrasts and also of paradoxes. But I can share a proof point on this very clearly. You see, if you look at typically a Volvo truck, which is priced almost, the initial price is almost 3 times of a competitive truck, but actually, and one would say that people would not buy this truck because it is priced high, but I think it's actually the economics of the truck. So if the truck can work for say 21 hours a day, I mean for 20, and it can carry on loads which are constantly 95% of capacity. So the economics is completely different. So today we have a market share of almost 80% in the mining segment, where trucks are required to perform on very heavy duty cycles and working at very difficult gradients, and working 21 to 20 hours a day and carrying very difficult loads. So I think the end of the day, I think on the face of it, we believe that it is just an initial price point that people get worried about. I think end of the day, people are looking at the value proposition. And I think if the value proposition can be explained, and that is the shift I'm noticing more and more, Nikhil, even if you look at long haul trucks, where trucks typically in India do 150,000 kilometers in a year. And if these trucks can do 300,000 plus kilometers in a year, the economics of a superior, higher priced truck is better than or equal to an economics of a cheaper priced truck. So I think, to my mind, we need to look at really the economics, and the customer is today becoming very, very discerning on total cost of ownership. And I think that is the key forward. And to my mind, if brands can explain that value proposition, I think you will find that the people will not get worried about the initial price points as much as we think, at least in my kind of business proposition. Yeah.
Very interesting, and absolutely right about the Indian consumer being value conscious, not price conscious, when it comes to making choices. Naveen, now your consumers, fret a little less about these topics than the average customer, but also, as that's very celebrated story went, the market for luxury cars in, kind of small cities or large towns, in Maharashtra elsewhere, or even Ludhiana before that, actually surprised a lot of the industry watchers who were focused more on the Bombays and Delhis and Bangalore's of the country. How do you see that, going forward, Naveen?
Consumption patterns are changing, and that we have to recognize and on board and then move forward. One of the effects of the pandemic was that a lot of people migrated from bigger towns to smaller towns, but they also carried the image of what they would be doing in the bigger town to the smaller town. I remember speaking to a dealer friend of mine who happens to be from Chennai, and then he said that when he traveled to his native place, he was surprised to see the landscape post pandemic. There were these mini showrooms and mini workshops and mini so and so coming up, which was giving a feel of the big city to a small town, right? Now, what happens? Internet is one big change point. Online shopping and all those things is one big change point. But what actually starts to happen is people's mindset, people's use of these products, goods, facilities becomes blurring between metro and urban. Like you said, Ludhianas of the world become more important. I'm going beyond that also. I'm going to town C, town D kind of situations where actually the consumption patterns are becoming very different. In my earlier organization, that is Toyota side, when we were opening up dealerships to cater to what we thought would be the A and B segment, we are pleasantly surprised when people walk with bags of cash and say, "I want a Fortuner." So this is what we don't have to be presumptive. We have to go with an open mind and see what is there in store for you. And if you can capitalize on this, then the market is yours. But there is a big market shift that is happening now.
Yeah. So let me then, just introduce one element which I'm sure has been on the minds of business leaders across industries. In recent times, supply constraints and inflation have been a dampener to consumption. What's your outlook on these factors? Because obviously overall consumption levels will be sensitive to how long these sustain. Any thoughts or kind of forecasts you have would be great to get. Kamal, maybe starting with you.
I think this is one of the downside risks what we all are slightly worried about. In fact, the going is otherwise very, very smooth for I think most of us in India, despite I would say challenges in many other markets in the world. India seems to be doing well, but I think there is a downside risk on inflation. We see WPI, which is the wholesale inflation, at high double digits continuing, and we feel that this will put a pressure on the retail inflation as well. And while the government seems to be still convinced that they will be able to control this inflation, we are worried about oil, we are worried about supply chain challenges, I think in the short run. But I think in the longer run, I am not much worried, because I think the kind of ecosystem India is creating, the kind of manufacturing capability which India is creating, I think we will be able to tide over it. But yes, in the short run, there is definitely a downside risk on account of inflation. And if you look at markets around India, I mean, if you look at the smaller markets, if you look at Nepal, if you look at Sri Lanka, they are already feeling the pinch of balance of payment situation and inflation, the dual impacts. And so I think these are some worrying signs. But to my mind, India is not at that higher risk, but there is definitely a downside risk of growth moderating on account of these inflationary pressures. Yeah.
Absolutely. Vishal, as you think about your full range of products across price points, one of the things that struck me when I was looking at other categories, more in the fast-moving consumer goods part of the world, is the following: that in the last 15 years, growth was led by the belly of the beast, the real, middle market pricing points. Last few years, not just the last couple of years, but last 4 or 5 years, it's been an hourglass shaped growth. Very premium products are growing, the value products are growing, but the middle of the market somehow, isn't, growing as fast. Do you see similar things in consumer durables, or are you seeing, kind of different growth trends there in light of the inflationary environment and, supply constraints? If you could add to that.
So it's actually both. Now, what is happening is that the penetration level in India is still not as high as many of the countries in the world. Our large population is there, so the demand is always going to be here. So growth is never going to be a problem in consumer durables, unlike many European American countries where there's a saturation point. So we've had two kind of growths. One is the first time buyer. Second is the exchange market. So people who've used the ordinary product, by ordinary I mean a basic television the last few years, now he wants to move to smart TVs. And I said the content OTT has really helped change the mindset. Today, if I don't know, probably non-smart TVs will become history very soon. Yeah. Probably the only reason why some people are buying is the affordability factor. But now with these bank EMIs and all that coming in, slowly people will go out. Just the way CRT TV went out, it's not that CRT TV demand went down or something. It is just that globally the raw material was not available, so they all moved to panel. Now, so we'll have two kind of consumers. You'll have the first time buyer, which is still there because we are hugely populated, low penetration level, and of course people who have used to a product now need to upgrade. So when they upgrade, normally when people who have all the products, now what next to buy? So what next to buy means suddenly, like I said, dishwashers have started coming in, a lot of vacuum cleaners are coming in. Diwali is the time where normally, earlier days people would buy one product. Now people buy, I mean, what do you buy? A household which has all the consumer durable products looks at something new in the marketplace. So I think from that point of view, India is very safe in terms of consumer durable market. There is always going to be a continuous demand. Yes, there have been few learnings in the last 2 years. The biggest learning is China and other places for raw material, some of the parts that come from there. There has been a lot of container shortage globally. So I think a lot of manufacturers will be forced to think, in terms of developing more of, OEMs and making more global products in India. I think this is something which is really going to change after that. Probably we'll have more of these, raw material supply companies creating their own base to sell here. So durables, I think it's a good time right now. Both sections, also, the OPP that we call opening price points as well as the premium product. Demand is going to continue, I think, next couple of years at least.
And Naveen, on that supply question, how do you deal with a situation when you plan for selling 20,000 units and the demand ends up at 35,000 or 40,000 units? What does that do, in a multinational organization like yours, in terms of, allocations and asks and such like?
It's a very difficult thing to handle, basically because the headquarters level, the supply and demand becomes the key in terms of where you'd like to generate market share, where you'd like to take the market space, etc., etc. So each country is then vying for attention in terms of saying that okay, this needs more attention than as compared to somebody else. The two main drive, issues that we are facing currently is one is the semiconductor issue, which I'm sure everybody's heard of it, which has made the famous thing that delivery is the only discount that is being offered today in cars, you know. And as far as the other issue, which is not getting out in the open, but will be, which is actually reflected in the fact that, you know, that all car manufacturers are taking continuous price increases, is one of the reasons is the shipping cost, the logistics cost, which is suddenly ballooning to a level which we've never been imagined before. So from traveling from the same distance, the part has to pay much more as compared to earlier. Now, this would put a cost pressure, definitely inflation, which Mr. Bali also spoke about earlier. But I think we have to be very carefully monitoring the situation, because I think once the opportunity arises, there'll be more and more people jumping into the foray, and there are already talks of, you know, making of semiconductors in India and so on and so forth. I'm not too sure how far it will be realized, but I hope it is in time for you know, for this, because as I mentioned to you, for my industry, we have not seen an all-time high. We're just reaching back where we were for, you know, 4 years back or something. So what has changed is the pattern in which these supply chain is being worked out, in terms of whether it is to be supplying to me or whether it's being supplying to the FMCG industry, who's giving them better margins. That is playing a role, etc., etc. So there is a lot of churning that is happening. At this stage, we'll have to be above all of this and make sure that, you know, that you are able to catch the spirit of the market, which today exists uh, very robustly.
Fantastic. And finally, gentlemen, given all that we've discussed, and given that all of you are there in the same room, virtually at least, I'd love to get some closing remarks on what you would advise viewers about their stance on marketing or go-to-market strategy for India as they think about their own business decisions to take advantage of consumption growth that's down the road. Any specific input from you, I'm sure, will be very valuable to the viewers. Naveen, maybe we can start with you, and then Kamal and Vishal can follow.
Sure. So I think if I were to kind of say what are the key mantras for success, I think it will be very simple: be alert, be agile, be flexible, be adaptable to what the situation arises. Be always looking into the market in terms of without any prejudices. One thing we have not discussed today's World's Earth Day, but we have not discussed that is that, you know, that sustainability will be at the core of this new generation. So do not overlook that aspect. They are very concerned about what's happening to Mother Nature, and therefore anything that we do, if it is detrimental to that aspect, would not find favor with this newer generation. So we have to be mindful of that. That's my advice to them.
Fantastic, Ed. Thank you. Kamal?
Yeah, I think very clearly, Nikhil, I want to just say that we in India have an opportunity of a lifetime going forward, thanks to an economy which will continue to grow. The supply chain rebalancing, what I was talking about, will certainly help India. The various forward-looking policies, if they continue, will only gather momentum for the economy. So I think it's important that we think big and ride on this promising future. And I completely, Indian incomes will rise. That is another thing, thanks to a multiplier effect on manufacturing, which manufacturing will provide. And so will segments across range, mass to value to premium. I think all segments of economy, you will see this. But I want to just caution about two things. One thing which I always worry about is the rising global inequities. I think which is a real worrying factor for all of us, not as just business, but also as citizens. I think there is growing inequity, especially economic inequity across the world, not only in India. We will have to watch out for that. We will have to see how we can be more inclusive as we grow, as we look at emerging technologies. And I think the digitalization, the digital transformation can help to reduce some of this divide in a much better way. And I completely agree with Naveen that ESG, the care for environment, society, and transparent governance is going to be the key. So I think this is our opportunity. As I said earlier, the stars are aligning, and I think we have the best opportunity. So let's go ahead and grab it. Yeah.
Thank you, Kamal. Thank you, Kamal. Vishal, any closing thoughts and inputs from you?
I think a couple of things which really went in favor of LG, I'd like to tell you, is the infrastructure. The investment that LG did in infrastructure helped us during the last 2-3 years. Now the biggest is consumer service. I mean, consumer service and good quality of products, even though our products command a premium in the marketplace. But I think during pandemic, where people were not allowed, many societies did not allow outside visitors, etc. This is the time when the consumer wanted to buy a product. He went for a product for which the word of mouth publicity said that the durable products were there. The failure ratio was not there, and even if it had to happen, a service center probably in every city, that helped. Followed by a strong distribution and channel strategy. Now, but distribution means easy availability of products even during the time when government was not allowing online to supply material. If you have warehouses across the country, if you have good stocks, ready stock available, that was one factor which actually helped LG gain over others. I think going forward, we will be strengthening this, because eventually I don't think the price is going to matter in consumer durable as much as it mattered earlier. There used to be a word called OPP, opening price point. Now that has moved, so the consumer is now willing to pay premium, for a good product. I think that has been a big learning for us.
Super. So then that's what we have in today's panel discussion, which was a very rich one, very clear vignettes, some sharp insights and actionable suggestions. And so thank you very much, Kamal, Naveen, and Vishal, for your time and for sharing your thoughts. And with that, we'll bring this to a close.
Okay, good afternoon and welcome to ET India Boardroom. On this panel today, we'll be discussing sustaining resurgent and resilient foreign investments. We have a great panel today. Our panelists are Apurva Jain, who's the founder of Coleus Capital, and Madan Sabnavis, the chief economist of the Bank of Baroda. And looking forward to our discussion over the next 45 minutes to an hour. If I could request you, Apurva and Madan, to please introduce yourselves. Apurva?
Yeah, sure. Thanks, Gopal, Madan. Good to be here. So basically, I have been a banker for most of my life, having worked across 5 countries. So my last assignment was in India, where I was regional head of transaction banking and cash management. And late last year, I've moved to Singapore to do a startup. And this startup is basically doing a consulting for banks and also doing investing into startups. So it's an interesting space, and it flows in very well with the topic of our meeting in terms of what can we do to influence the financial flows into India and the region, and what are the benefits associated with it.
Thank you, Apurva. Madan?
Yeah, I'm Madan Sabnavis. I'm an economist by profession. I've been working for around 35 years now. I worked in development banking, commercial banking, engineering, commodity exchange, rating agency, and now back to commercial banking. So I'm working with Bank of Baroda as the chief economist. And my work has always entailed looking at all aspects of the economy, and especially examining everything that's happening in the Indian economy. And this particular subject becomes very important for us because today we are saying that India is one of the most attractive destinations for foreign investment. Yet we see that the flows of both FDI as well as FPI has not been as even or less volatile than what we had expected. So I think that's what really excites me about the subject which we are discussing today.
Great. Thank you both. And my name is Gopal Sarma, a partner with Bain & Company, and have been working with clients in India and globally on new business opportunities, on growth opportunities. And I think as we all are seeing, this is a very exciting time for India and the region. And it's a great time to be talking about the opportunity for capital flows and what are some of the challenges. So with that, Apurva, maybe I can start with you. And while there is a lot of opportunity and there's a lot of, we are living in a capital rich world. I think one of the concerns increasingly is that capital is no longer being used just as capital, it's also being used as a weapon. As we've seen in recent events in Europe and before that in multiple other geographies, politics is beginning to influence the free movement of capital. Now, do you see that as being more a long-term issue? Do you see that as having an impact into the way capital is moving around the world? We're already seeing a bunch of folks being a little more careful about, say, investing into China than they were 3 to 5 years ago. So maybe I can start with you, Apurva, on that.
Yeah, sure, Gopal. So I would like to break it into multiple parts, Gopal, because on one side, we are looking at capital investment in terms of short term and in terms of long term. So what are the returns in short term perspective, long term perspective? Then we are looking at the sectors where this investment is going. And then we are looking at geopolitical situation and uncertainty in terms of investment and extraction. So if I break it down and if I look at it, okay, in terms of short-term investments, yes, there's a huge amount of volatility. First, there was COVID, there was the pandemic across, I think it's once in a lifetime kind of a event which has impacted the entire world. And then, of course, I think the Russia-Ukraine war was a bit underplayed in January, February. No one expected it to escalate to the levels. There was a higher degree of escalation, which has led to a number of shortages in terms of commodity with oil price hike, etc., etc. Now, over a period of time, in my mind, what I have seen is that this kind of uncertainty has led to a few factors. One is extraction of investments that had happened. So we have seen an impact in terms of reduction in FDI investment. As we have seen coming into India, there has been a 15% reduction in 2020 as compared to 2019. But from a long-term perspective, there may be opportunities. But coming back to the point that can it be used as a weapon, so to say, I think it has to be a balance in terms of target. That what is the target in terms of which country you are investing in or which sector you are investing in? Because it depends on the GDP of the country and the growth of the country. If the country has got vacant growth and there's a huge velocity in terms of opportunity, then yes, FDI investment is definitely very useful and it will lead to growth in the country. But if the country is already at the cusp of very high growth and yet the FDI investment is happening, in that case, I believe that the growth may not grow at the same rate and there may be an impact in terms of further growth. So it may actually lead to a negative inflation whereby the individuals or the population may think that since more and more investment is coming in, should I wait for the prices to reduce and should I reduce my spending, which may lead to a glut and reduction in production. So there has to be a balance between the target, between geopolitical and between short-term and long-term investments.
Yeah, no, thank you very much, Apurva. And Madan, very specifically on this point, a lot of the big pools of global capital are very conservative pools. You look at pension funds, you look at insurance. These are all pools of capital that are far more concerned about risk than they're concerned about return. As we see in the kind of profiles that some of the big pension funds or insurance funds actually offer in terms of return on investment. Especially for these pools of capital, which are going to be required for big ticket investments, whether in infrastructure, whether in large industrials, with all the global uncertainty. So I was being a little facetious when I talked about capital as a weapon, but more from an uncertainty and a risk and a geopolitical risk perspective. Do you see these pools of money moving as freely as they were, let's say, in the 2005 to 2020 period?
In fact, Gopal, I would look at foreign funds as actually being a weapon, of what you mentioned earlier. Because I think the way in which the dynamics of politics has changed in the last few years is that if country A doesn't like country B, it's not going to be an invasion of one country on the other, but it's going to be through the economic mode, which means that it could be any kind of these sanctions that we have seen today, for example, which have been imposed on Russia. Now, I would say that this is something which is going to be the future, because I don't think countries are going to invest in warfare of other countries to protect other countries. But I think the tool which is going to be used will be economic sanctions. When I talk of economic sanctions, it will be coming in the way of the flow of funds, because if a country like the United States is going to advise companies, American companies, that you should not be investing in country A or in country B, then I think there is going to be a fundamental change in the way in which these investment flows behave. I think earlier what Apurva was saying is absolutely right. If you look at where the opportunities are, so India was one of the most attractive economies for the simple reason that there was a lot of lacunae in terms of infrastructure, in terms of the large population which had to be satiated with various goods. So therefore, it made a lot of sense for people to invest in India. And they will probably continue investing in India until this full potential is achieved. But I think the fear which is there going ahead is that in case politics actually takes over pure economic decisions which are being taken by economic agents, then we have a problem. Because if countries are going to take a position saying that if we do not take a stance against, say, Russia, countries supporting not being against Russia would naturally be probably face some kind of threat of isolation from the Western world, then there can be a problem in terms of the flow of foreign funds. So I think this is the critical factor, because when today you're talking of, say, pension funds who are looking to invest outside, they will actually seriously evaluate not just countries, let's say rogue nations, which are defined today, like say something like Russia, or probably what you mentioned about China, but also there are these transitive relations which are there, that if you're not going to condemn Russia, you also get condemned. That has not happened today, but one doesn't know if that happens tomorrow. So as an investor, I may think twice about where I should be investing, because I have a plethora of investment opportunities today. India is one of them. So at times one may feel that one will have to tread carefully out here. We cannot take things for granted, but just saying I have the most conducive policies for foreign investors, I'm opening my doors, and therefore I can take foreign investment for granted. There could be these politically driven factors which could come in the way going forward.
Fantastic. Thanks for that. And just staying with you, Madan, you talked about investment flows. I think one of the concerns that we are seeing and hearing a lot is that we are entering a period of inflation. We are entering a fairly significant inflationary period. And in fact, there has been some commentary that the real inflation on the ground is actually probably more than what we're seeing published or what we're seeing reported, because the basket itself hasn't changed. The basket which is used to measure inflation hasn't changed in many years. And we still are looking at some fairly last generation measures for computing inflation. Having said that, in a growth economy, obviously, if we enter into hyperinflation like in Argentina or other countries, then we do have problems. But how bad is a slightly higher inflation rate?
From the point of view of investment, I think it may not be very serious. The reason I say is that, let's assume today officially we have an inflation of 6%. And let's, for the purpose of argument, say that maybe it could be 7 or 8% because it's being underreported, or the way in which the index is defined. If you look at the comparable numbers of other countries, I don't think we are very much off the target. And I'm quite sure that almost all countries have inflation indices which have similar kind of problems of being dated. Okay, I'm not quite sure how it holds for all the countries, but definitely there is a case of saying we have a base year. You normally don't change the base year once too often. You do it maybe in a decade or so, something which also India is working upon. But more importantly, I think as an investor, do I actually get deterred by inflation of 6% or 8% or 10%? The answer will actually be no. I think what you have rightly pointed out, if I'm talking of countries like Argentina or some of the other Latin American countries, which have at times have had inflation in the region of 50%, maybe 100%, I think that is something which is very much disturbing. And today one is aware of the fact that most of the inflation which is being caused is more global in nature. And it's not something which is specific to India. In fact, if you look at India's recent economic history, we are still ranging around 4 to 5%, which I think is fairly tolerable. So I do not think that the current inflation which we're seeing in the country being either understated or whatever the actual number is, would really come in the way of an investor, purely from the point of view of making a decision. Because I think they'll still go by saying what are the opportunities which are there, what are the returns which I'm likely to get in India. And they still look very, very, very much bright. And I think to the credit of the government, I think a lot has been done in terms of facilitative policies, right up to the extent of insolvency resolution, which I thought was a major cog which was there. So lots of reforms have been undertaken, very positive reforms which have started working. So I think these will be probably be the more overwhelming factors rather than a number like the inflation.
If I were to kind of paraphrase, and correct me if I haven't got this right, what I'm hearing you saying is at the current numbers, let's say 6, if it's really 7-8%. At these current inflation numbers, it's actually not such a bad thing for India. It is comparable to many economies that are competitive to us from an inflow perspective. But adding to that, but is it going to actually be beneficial? Are we going to see also because if I look at the interest rate today, it's about the same as what the inflation rate is. So the real cost of money is 0. Banks have significantly cleared out their balance sheets. There is a lot more capital available today. And we're already hearing a lot of corporates getting onto the borrowing bandwagon again. I think one of the challenges for growth in the last 5 years has been that there's not been a lot of velocity of money flow. Yes, it's been there in some of the growth sectors, it's been there in some of the tech sectors, but in core industrials, core infrastructure, we haven't seen a lot of money flows. There's been no velocity of money. But now with real cost of money approaching 0, do you actually see this as being beneficial in the short to medium term?
In terms of the borrowing cost, the real borrowing cost definitely would be beneficial. But assuming that interest rates will be rising in India, now how many times will the RBI increase the repo rate could be a matter of debate, but we do believe that maybe 50 basis points minimum could go up to maybe 100 basis points, depending upon the course of inflation, how permanent is this number of 6 or 8% which we're talking of. The cost of funding is still relatively low in India, and I think that could probably work to our advantage. But the kind of difference which we are seeing today may not be something which will last forever, because there would be a tendency for inflation to come down and the nominal interest rates to also increase. So the kind of benefit the larger benefit which we're getting today when investment conditions were not that good, and today we're talking of where investment conditions look good, the opportunities look good, better capacity utilization in industry, which means that lots of companies are going to start investing money. I think there would be definitely a case of less of the advantage that we had earlier, but definitely something, the interest rate structure is definitely congenial for a more investment.
Great. And moving to you, Apurva, on this, any comments, thoughts? I'm not going to ask the questions again, but I'd love to hear your perspectives from a very different geographical point.
Sure. So a couple of points from my side. I think current CPI inflation is at 6.95%, right? And the finance minister had said that it's still not so bad, but of course it's outside the band of 2 to 6% that RBI or the finance ministry had stipulated. I think, from an overall standpoint, yes, inflation and growth are at times inversely focused. And RBI has actually made a stand now in the last MPA meeting that they're going to focus on inflation rather than growth. Till now, of course, they were focusing on growth. But I think we need to keep inflation under control, because the uncertainty that has come in is because of the Ukraine-Russia war and impact on oil prices and commodity prices. That was not factored in, and that is very recent, starting from middle of February. So that uncertainty has to be addressed, because to your point, Gopal, if you are looking at real inflation, maybe it may be somewhere north of 10%. But even if you go by 6.95% and you look at what the RBI has said in the last meeting, I believe personally that RBI will do something pretty soon to curb this, to curb the inflation, and probably, and just my personal view, probably increase the rates, because there may be a benefit. If you look at inflation, which is close to 7% now, it's very similar to US inflation. Whereas our rate, central bank rate, is 4%. as compared to 0.25% as of now in the US. So actually it makes a lot of sense to invest into India from that standpoint, right? But we are not seeing that kind of capital market investments coming in. But there is a possibility that if this kind of situation remains and our interest rates may go up further, then yes, there's a possibility that that may actually accelerate the investments coming into India.
Yeah, because I'm taking this back to the days of the mid 2005, 2007, where money literally was making money for you.
Yeah.
Till a lot of the exchange controls and banking controls came to literally it was free money. And we could, so while not really alluding to that kind of investment, which is more opportunistic, the same question that I asked Madan, do you believe that we could actually see capital flows into India, more capital flows into India over the next 12 to 18 months, given the inflationary situation and the cost of capital?
So actually, I would not be looking too much. Suppose I keep the inflation factor aside for the time being.
Yeah.
Are we going to see more FDI? Are we going to see more FPI? So let's break it up into two parts. In my view, I think as far as FDI is concerned, I think it would continue in the normal pace. So what we were getting something in the region of new equity flows in the region of 60, 65, and the reinvested earnings, we're getting something in the region of around $80 million. I think that kind of a number will probably continue because these are investors who are focused more on the long term rather than on the immediate term. However, in terms of FPI, I think there could be issues out here because this is where I feel that the interest rates become important. Because if I'm looking at typically at your debt investors, they would be looking at comparable returns in other countries and the fact that India hasn't increased the interest rates and the US has definitely spoken about tightening, which means that better returns in the Western economies compared to emerging markets like India. FPI flows into the debt segment could definitely be still in the negative territory. They could be outflows rather than inflows. In terms of equity, I think it will probably continue to be whimsical because I think almost all the equity markets seem to be moving almost in tandem. So I think when you're looking at what's happening on the NYSE and what happens on the BSE or the NSE, I think there is a lot of strong correlation. And I think it will continue to be volatile. Now, will we get 15, 20, $30 million into equities? The answer is probably not, because again, it will depend upon the alternative markets as to how well they are doing and what happens to the currency, how stable is the currency, because that's going to be another factor which would come into play. And overall growth, of course, if you're looking at the potential of companies in India, I think if you look at the larger companies, at least the large cap segment so far, so-called large cap segment, I think they may probably be already having one of the best PE ratios. So there may be more concentration on the mid cap or the small cap companies, but that would be to a very limited extent. So on the whole, I think FDI will continue its normal pace where there's a long-term view which is taken. In terms of FPI debt, I still expect it to be negative until such point of time that the RBI actually brings about more aggressive increases in interest rates, which gives better returns to investors. And equities will continue to be fairly whimsical. And if at all we do get these kind of funds in good quantities, it could be more at the mid cap and small cap.
I'll probably add in there in terms of two parts again. I think we need to segregate what is being done in India and what is the external forces on which we have no control. So if we focus only on India, okay, because external forces, I think pandemic is nearly over. And the impact of the war, I think we will have it one way or the other within probably a few weeks' time. I think it is overly extended already. So if I focus only on India and if I look at next 3 years, okay. Now, first and foremost, we are looking at per capita income, which is at a very good level now at around $2,000. I think that is a tipping point when the middle class really starts investing and spending money. I mean, lots of households will have their first car, they will have their first refrigerator, they will have their first air conditioner. And I'm talking about the masses. I'm not talking of tier 1 cities. I'm talking of tier 2, tier 3, tier 4 cities. So I believe that growth is going to explode in the next 3 to 5 years in India, okay, in terms of spending, in terms of people's lifestyle, in terms of Obviously, digitalization is what we have seen. And if you look at the number of unicorns, India has got like is the third largest creator of unicorns now. There are like 80 plus unicorns in India, which in itself are valued at more than 270 billion US dollars. So this is only going to grow by 2025. I believe that there will be more than 100 unicorns just out of India. So one is that in terms of growth of India, in terms of technology. And then if you look at what the government has done in terms of, say, ease of doing business, India has skyrocketed and improved its ranking by more than 60 ranks over the last 3 years. I think last is India is 63 something in terms of global ease of doing business, whereas it was 120 or 130 3 years ago. Apart from that, if you look at infrastructure, you look at transparency, it has only improved. And now there is a talk of full convertibility of rupee, which is now partially convertible. So if we are looking at put all these things together and we look at 3 to 5 years timeline horizon, I mean, I don't see a reason, apart from, of course, external factors, geopolitical risks, what happens to Russia, what happens to commodity. But if I purely focus on what is happening in India, I think India is ripe for all these investments to come in.
That segues me into two specific questions, and I'm actually going to flip the order. And I think Apurva absolutely believe in the India growth story. And in fact, we've been looking at this for a while now. And at Bain, our belief is that India is going to finally move from a pyramid structure of the economic demographic of the population to a pentagon. And by 2028 to 2030, for the first time ever since independence, we're going to have more middle and upper middle class households than lower class households. Yeah. So overall, the crest of the wave is rising and the shape of the wave is changing. And this is exactly what happened in China 15 years ago.
Absolutely.
What started the growth in China was the movement from a pyramid to a pentagon. And for a variety of reasons, and I don't think we have the time to get into that here, but India is on that journey. We're very clearly on that journey. And we are seeing the growth in middle and upper middle class households and lower middle class households is way faster than, and there's actually degrowth in lower class households now. The phenomena has already started. So that brings me to a question that I'd love to hear perspectives on. How important actually is global capital for India? Unlike the China model, which China was an export-driven growth model. It basically became the manufacturer for the world. India is never going to be that. Right? We will have distinctive advantage in a few sectors. There are others where we won't. But India, even if we look at trade flows, if we look at any economic flows, India's always been a domestically oriented growth economy. Consumption growth, economic growth, GDP growth has come from domestic growth. It's not come from just exporting to the world. Now, in that context, how critical really is global capital? And will we at some point be able to utilize it when we get it, but continue to grow when it becomes constrained? And that's the question to both of you, Apurva and Madan.
Okay, Madan, let me go first on that. And I would say that, Gopal, there's no right answer and there is no wrong answer either. Is it important? I would say, yes, it is important, but can it be beneficial as well as can it be a challenge? I think it can be both. We have to look at it like the usage of a knife. You know, if you use it properly, it will be to your advantage, but of course it can hurt you as well. So the way I look at it is that for us to accelerate the growth, we would definitely need foreign capital, primarily in areas which is long-term. You see in terms of infrastructure, in terms of manufacturing, and government has done a lot again in terms of making the automatic investment ready. What will help in terms of accelerating that is improving the transparency, improving the ease of doing business. But yes, it is important for acceleration. It is important for acceleration. Apart from money, investors also bring in Now, if we are only focused in with actively done, but why reinvent if someone has already worked on it? So, but we should not be reliant on it, because the risk of being reliant on it is that come another geopolitical situation or another global crisis, the countries or the institutions or the funds or the pension funds which have invested, they will be the first one to extract the money. So if we are more dependent on them, the extraction of those funds is going to lead to a huge situation in terms of our currency devaluation, in terms of our financial planning, and in terms of overall inflation, which is definitely avoidable. So it is a fine balance, and I would rely on the expertise of our economists and our regulators to make sure that we are able to be as close to the fine balance as possible.
Thanks for that, Apurva. Madan, your perspectives on this?
Yeah, so let's look at it that today we are talking a lot about the $5 trillion economy. So let me just say that let's assume an exchange rate of 80 rupees to a dollar. So we're talking of an economy of the size of, say, 400 lakh crores. Okay, we're talking of a total amount of investment which is required. I'm taking a conservative number of around 30%, which means I require around 120 lakh crores. Now, let's look at the amount of foreign direct investment which we could probably get at a reasonable level, maybe $100 billion. So $100 billion would mean something like 8 lakh crores, maybe 100, 110, 120. I'm saying that probably able to get around 10 lakh crores out of this 120 lakh crores we're talking of. So to my mind, I think when we're talking of foreign investment, it will be a very good supplement to have. But on its own, it will not be able to push forward the overall investment cycle in India. It'll have to come from domestic resources, for which I do have to depend upon the banking system, because we don't really have that kind of a sophisticated corporate bond market. Of course, we have the ECB channel, which has been used fairly effectively as long as interest rate differential was favorable for us. But even out here, we've been getting something in the region of around $30–35 billion at the best of times. So I think when we're looking in terms of foreign funds, it will definitely be something which will be useful and can plug the gap, provided we're able to reach that kind of a potential of investment. So here, actually, Gopal, I have a slightly different view from the rather optimistic picture which you and both Apurva have painted about the future of the economy and how shining it's going to be and how the consumption class is going to increase. I think this consumption story is something which we have been talking of for quite some time, and even before the pandemic came. I think one of the fundamental reasons as to why we did not see too much of investment is because we have excess capacity. We have excess capacity because we don't have enough money being spent. So consumption expenditure has been very much lackluster. And that's one of the reasons for this, of course, is my belief is that A, jobs have not been created. B, the level of equality has not been, the level of inequality has actually still been fairly distinct. Meaning thereby that we've still not seen the people at the lower income groups actually having the wherewithal to kind of push into the consumption stream. And most of the money is actually being spent on necessities. And on the issue which we spoke of inflation, considering that we continue with high inflation this year, I think that erodes the purchasing power to a very large extent. So my optimism for this kind of future growth of a more egalitarian or a more broad-based spending coming from within the economy. And I think this is something which even the FMN mentioned, saying that we're hoping that consumption picks up, because investment has gone through because government is spending, maybe the private sector will enter with a lag. But I think ultimately we need to see consumption going up. That's when your investment will pick up. That's when we'll face these conundrums of saying that, look, do I have the funding capability? Will the foreign investment, will the ECB channels, will they really help me out? I think if this kind of a scenario picks up, yes, these foreign funds will be very useful. But the fundamental thing is that domestic requirement, the demand for investment should be more buoyant than what it's today.
So if I were to kind of paraphrase what you're saying again, the core thesis of India moving from a pyramid to a pentagon is something that you believe is not happening or not happening at a fast enough pace. And it is only that, I mean, I think what we're all agreed on is that's going to create the virtuous cycle of growth. I think what we have different points of view on is when that is actually going to happen. But if if and when it does start happening, that spend cycle itself could significantly contribute to the kind of investment that we require for further growth.
Yeah, I actually don't want to deviate too much, Gopal, because the
Yeah.
issue again is that are we creating enough jobs? I think there's always this controversy about whether employment is going up, unemployment coming up, down, CMI, EPFO. But fundamentally, I think for this structure to change, we need to have more jobs created so that people have the spending power, which to my mind is not happening at the right pace.
Okay. And let's hold that conversation for another day. It's which again, it's a rich conversation which is going to take time. But maybe if I could get back to the theme that we were talking of before this question about foreign investment, specifically into equities. And one of the comments that I've been hearing quite consistently over the last, I would say many quarters, is that most FIIs are net negative in India now. So while there are occasional positive flows, on a net basis, they've been negative. The reason that the markets have not reacted adversely is because of the strength of SIPs and the volumes of individual investors who are actually getting into the market. And there's just a lot of liquidity that's flowing in, also because there are not a lot of other channels to spend on. My question is not so much about the flows, about what's happening on the individual investor side, but what are the one or two things that you would suggest, each of you would suggest, to bring back FII confidence that are within our realm of control? Clearly, there are global factors that are outside our realm of control, but are there things in our realm of control that we can do that can help bring foreign institutional investors back in a big way and make these net flows positive again? And Madan, this time I'd like to start with you.
No, actually, this time I don't have an answer because I don't think it is, when a decision is taken on equities, it's more based on their own perceptions about how the market is priced and what are the future earnings which are going to come through. So it's run a lot on the basis of fundamentals. I don't think there are any institutional impediments which are there, serious impediments which are there. I think we had this issue of taxation and all that, which is where it is. But I think when you're talking of FDI, it's possible to have more congenial policies. One can actually suggest what has to be done, if at all there are lacunae there. But when it comes to equities, I think it's purely the case of the fund manager taking a decision about how attractive the market are, what are the comparable returns in other markets. So I think this is something which will remain an unknown to us. It's an exogenous factor. And I don't think there's anything that we could actually do to make sure that there are greater flows coming into the equity segment. Because there are not people here with commitment for a long time. They're looking where money can be made.
Okay. And Apurva?
Well, I partially agree with that because the thing is that apart from, I don't think this outflow has happened because of anything fundamentally wrong with our markets. I think it has been because of factors which are outside of India. Just like you have seen factors, I mean, it's nothing as impactful as what we are seeing in China as an example. So lots of investment is leaving China, which was in stocks because of various policies or policy changes that are happening. None of that is the case in India. And you have made a very valid point, Gopal, that the retail investors and SIP has come in to soften that blow, which would have otherwise impacted our markets in terms of the funds movement or the funds that are leaving the stock market. But again, if you tie it in with the growth story, if you tie it in with the middle class, if you tie it in with the Pentagon shape, if you tie it in with the valuation of our companies, if you look at the valuation of the market and you tie it with the full convertibility of the rupee, I think these flows have to come back. You can't ignore a market and a growth like India and the stability of the companies and the growing middle class. I would say that partially agree with Madan that it will depend on our own growth, but the reduction that has happened has nothing to do with our growth. It has to do with the challenges that they are facing in their own markets.
Interesting. I think on this one, I would actually tend to agree that while there are many naturally attractive factors about India, and it's surprising that flows are the way they are. Only time will tell on whether or not we are going to be a preferred destination for global equity capital coming into equity markets. I think the one element that we'll probably need to be a little cognizant here is the depth of the Indian market. So while we keep talking of the small and mid caps and the large caps, and it's a challenge that even some of the mutual funds are facing, which is what is the next set of equity stocks that they can put money into? Because one of the issues is that there's just too much competition for the good stocks. And that has been one of the reasons to drive pricing up. So the faster we get to more depth in the markets with a lot more exciting investment opportunities in the equities market, I think the better it's going to be for some of these flows to start coming back. We are going to be running out of time soon. So I'd like to conclude the session by asking each of you, and Madan, you already alluded to it, so I will formally ask you the question. If you had to do three things that would help FDI, not equity type, not FII, but real FDI into hard investment assets on the ground, if there were two or three things that would be on your wish list, basis which you think a lot more FDI could come in, what would those be?
So one is that we need to have more clarity or some kind of protection which is provided to investors whenever it comes to, say, natural resources. Now, why I say natural resources is that we have seen that typically if you look at FDI, they go to areas which are not regulated, where they don't want to have regulatory issues coming up time and again. So I think that is one thing which I'm not quite sure about what specifically can be done for which sectors, but I think given the fact that they have tended to shy away from any sector wherever there has been government interference, government policies could be changed at any point of time. So I think this absence of clarity on policies have kept them away from one particular segment. So I think that is something which needs to be relooked at, so that because those are areas which require large amounts of investment. And in case we're able to provide the right kind of an environment, we could be seeing larger flows of funds coming up. I think that would be the main thing which I would be interested in seeing.
Okay, anything else from a taxation, from a convertibility?
No, I think convertibility already exists for foreign investors. It's full convertibility is there for them. And taxation, I'm not too much of I don't think I'm not too much of an expert to talk on taxation, so I'd rather not talk on it.
Okay. And Apurva, your views on this?
My view is, in addition to what Madan has said, I would say that we need to create more revenues for ESG investments. So sustainability is a very, very important aspect, and the recognition is increasing more and more. So considering the size of our country, considering the population, considering the economy, considering the growth, we have to create more and more opportunities for other funds, other pension funds, governments, large corporations to invest into ESG. We need to create opportunities that they can invest into ESG solutions in India. That is, I think, renewable energy, diversity, reduction of carbon, etc. It is very, very important. The second part is we need to continue the good work that is happening in terms of transparency of policies and ease of doing business. Yes, we have done a lot, but we are still 63rd in global ranking. Why? What will it take for us to be in top 10? What will it take for us to be in top 20? I think there's not a ready answer, but we need to strive to do that. I'll give you a simple example. I came to Singapore, moved here. I could register my company, open the bank account, everything I could do online without having to meet the person. And I could check my company, get the company UEN number, discuss with everybody, and register a company in a very credible jurisdiction within a day. So what will it take for us to get there? I think that is something, it is not a one-stop shop right now. We have to go through multiple iterations, but I think that is the end goal that we should look at.
Fantastic. Any closing comments from either of you that I may not have touched upon that is top of mind when it comes to the opportunities and challenges of capital flows into India?
See, on the whole, I think that we need to look at foreign capital flows more seriously, simply because besides providing us funds from the point of view of the market or from the point of view of overall investment, we've seen that for a country like India, which would normally be in a perennial current account deficit, we get a lot of support which comes from the capital flows, especially through both the FDI and FPI route. So as an economist, I feel that we need to do everything in order to make sure that that we have a facilitative environment so that these funds come in. Because at the end of it, I think the whole business of self-interest works. They come in for self-interest in order to promote their own profits or whatever their interests are in India. But this helps the country also grow at a faster rate. And given the fact that theoretically, there are no limits on the amount of funds which could be coming through this foreign route, that is both FDI as well as FPI, I think we need to be very nuanced in our policies and our overall approach, and we should be more welcoming so that it actually becomes mutually beneficial for both India as well as for the investors.
Fantastic. Apurva, any closing thoughts?
Yeah, I would say that, yes, absolutely. We need to look at it as partnership. We should not be looking at it as a competition. We should be looking at it as partnership, because at the end of the day, we also need to be selfish and see that how is it going to benefit us. And at the end of the day, we need to ensure that we reduce the friction that is there in terms of policies, in terms of taxation, in terms of rupee compatibility, in terms of IP rights, in terms of transparency. I mean, we need to reduce the friction so that we ensure that the funds flow in smoothly. It is transparent to all the investors that where they are putting in the money. We are encouraging intelligence coming in. We are safeguarding their IP. I think those are some of the challenges with which the investors faced earlier when they invested into China. And we have to learn from that and ensure that we give an opportunity that we learn from those mistakes and don't commit them. Yeah.
Fantastic. Thank you both. Really appreciate you both taking the time and contributing to a very rich discussion on a topic that I'm sure we haven't heard the last of.
Sure.
And really appreciate your time, and thank you very much.
Thanks.
Thanks, Madan. Thank you.
Bye-bye.
Bye-bye. Thank you so much for tuning into ET India Inc. Boardroom, and stay tuned for more.
Hello and welcome to ET India Boardroom. On the panel today, we'll be discussing the enormity of India's current job creation challenge. Our panelists are Manish Sabarwal, he's Vice Chairman, Team Lease Services Limited, Dheeraj Nair, Director, Economics and Policy, Vedanta, and Abhay Raj Mishra, President and National Convener, Prahar. And I'm Joydeep Bhattacharya, Partner with Bain & Company. To get the discussion going, what I thought we could do is to start with taking stock of where we are and hearing our panel define what the problem is. Just to put some, facts out, and these are probably well known. India has the 5th largest GDP, but we rank, lower than 130 in terms of per capita income. We add anywhere between 10 to 12 million to the workforce every year. But if you look at, the job creation over the last couple of decades, it's been in the range of about 30 to 35 million jobs that have been added. So clearly, there is a big challenge ahead of us. And, with the view to the future, we are going to account for at least a quarter of the addition to the global workforce over the next 2 decades, right? So our addition to the workforce is going to be quite significant. So keeping some of that perspective in mind, what I thought I could get, the panel to do is to, define what they see as a problem. Is it merely just job creation? Is it an issue of wages? Is it an issue of productivity? And Manish, maybe I could request you to, get the ball rolling. We'll talk later about, solutions and unlocks, but I would love to hear you and then, Dheeraj and Abhay to kind of talk about how you see the problem.
I mean, I think the biggest question is what is the problem? Because a lot of people believe there is a jobs problem, and at least to my mind, that sends us down the wrong path because unemployment has stayed between 4 and 9% since independence. And that's not a fudge because you can't have multiple definitions of unemployment. You can have multiple definitions of underemployment. You can have multiple definitions of poverty. But once you start, fiddling around with definitions of unemployment, then you have nothing left. And so my case would be that the problem is not jobs. Everybody who wants a job has a job. They just don't have the wages they want or the wages that they need, because that is the only way we would be able to reconcile the sort of difference between our poverty rates and our unemployment rates. I think this is important for a few reasons, because if you think the problem is jobs, you will mandate a 3-day work week. You will take away people's shovels and give them spoons. You will throw money from helicopters, right? Because if the problem is bhuka nanga pyasa, then you don't really have to talk about other things. If the patient is in the ICU, then you don't tell the patient to lose weight or quit smoking. But if the patient is in the ICU for 50 years, you've got to step back and ask yourself, what is the challenge? So I would submit that the problem is not jobs, it is wages. And the only way to raise wages is improve the productivity of 5 things: the productivity of our regions, productivity of our cities, the productivity of our sectors, the productivity of our firms, and the productivity of our individuals. But we can go into solutions.
Dheeraj, would you concur with Manish or, add, other facets to, the problem definition?
Yeah, I tend to agree with Manish, but the two statistics I generally look at in the context of this problem. One is that agriculture employs some 45% of the workforce and contributes 13 or 14% of GDP. And the second statistic I look at is that the formal sector, and I know Manish has slightly different view on this, but the formal sector employment has not really grown significantly over the last 30 years. I mean, it's improved a little bit, but not significantly. And I think these two really tell you that the problem is not so much unemployment, because the fact is that in India, people cannot afford to be unemployed. There is no social safety net, like in Europe or elsewhere. They can opt not to take a job and, live on dole. That's not an option. And there is all this underemployment in agriculture and in, the unorganized sector. So I think the problem definitely is underemployment. How you define it is a tough one, and there are multiple definitions. But I don't think the problem per se is unemployment. And so I agree with Manish, it's a wages problem. And those two, the fact that so many people are in agriculture producing so little GDP, and so few people are in the formal sector, which gives better wages. If nothing else, it gives better wages, better benefits, and people are not in that particular sector. So those to me are the two most telling facets of the problem, symptoms, if you may say so. And then we can go into more details later. But I think I would agree that the problem is really underemployment.
And Abhay, just to round it off, I mean, I read that you started a movement in terms of livelihoods, resurrection, etc. A couple of years ago. I would love to hear from your vantage point. How are you seeing the problem as Dheeraj and Manish talked about? This is question of wages really, as opposed to jobs.
Yeah, well, I would partly agree with Manish and Dheeraj that partly agree, but I'll not fully agree that jobs not the problem. Jobs is a very big problem. Rather, I would like to say that the employability is a problem, right? Wherein comes the skills, education, and everything. I'll talk about it later. But when we talk about the unemployment, it has been a problem. It is a problem. Only thing is this, that certain numbers have been changing, every year. If I give you a data, it is the government data that, I'll start from 2019. The unemployment rate was 5.27%, which was 0.06% decline from the previous year, that is 2018. In 2020, it was expected to be 7.1%, marginally increased, 1.84% from the previous year, that is 2019. If we talk about 2020-21, it is again expected to be, it was expected to be 9.8%, but that time it was the COVID and everything, and it sort of declined, and it was 8.1% in February 2022. And in March 2022, it further fell to 7.6%. So since I am one more perspective, I would like to give it to you, because I am working with the unorganized sector. mostly the factory workers, manual workers, street vendors. So they have been grossly impacted by the COVID, and otherwise also because of the employability issue. Here comes the education and skills. It has been there has been a lot of job losses, across the industries, especially so for these unorganized sector workers are concerned. So because we have been working, we as an NGO have been working with these people, and their income, their livelihoods have been grossly impacted. It was always impacted, but the COVID has played a significant role in the destruction. So that's how I look at it. When I talk about the employability, basically it's the employability crisis. Even the International Labour Organization also, in one of their reports, says, in context of India, that because of the automation also, there is a fear and there is a threat among these manual workers, because they see a lot of job reduction in the coming times. According to the ILA report, 51.8% of the business activities in India, which is significant number. And worst it is going to affect, are the workers who are basically low skilled jobs, who have small assembly tasks in the factories and doing all the odd jobs. So it will all be replaced by this automation. I'm not against the automation or digitization,
Sure.
but there has to be some kind of balance. So the problem of unemployment is there, still there, very much there. It may not be there in the urban sectors, which is also there. I can put I have some statistics which I'll of course share with you in the coming session today. So definitely, it's employment is a big problem, and India has been sort of struggling with it for decades. Until the numbers have been changing here and there.
Understood, Abhay. Clearly, and what I'm hearing all three of you say, that there's clearly an issue of wages for sure. There is also, Abhay, as you're saying, the question of employability. There is an unemployment issue as well that we should absolutely kind of consider. With that definition, and Dheeraj, I do agree that there are multiple ways that you can try and define underemployment, etc. But in the interest of taking this discussion forward, what I thought we could, start by, if we understand the problem to be one of, let's say wages and productivity as a starting point, what could be some critical kind of unlocks to get things going? Manish, you said that this patient has been in the ICU for the last 50 years. There have been some attempts, there have been some recent attempts in terms of labor codes, etc. But if you were to define what could be the 3 or 4 most critical unlocks, those could be regulatory, they could be related to infrastructure or skills deployment. I would love to hear you. I was fascinated by what you wrote a little while ago in terms of the regulatory cholesterol as you described it. But I would love to hear you, in terms of the unlocks, and then Abhay, Dheeraj, I'm going to come to you after that.
See, India doesn't have a shortage of land. You could give every Indian household half an acre and they would fit into Rajasthan and in Haryana. We don't have a shortage of capital. 50% of our FDI since 1947 came in the last 5 years. And obviously we've seen the unicorn phenomena. So for the right opportunities, there is capital. We don't have a shortage of labor. As Dheeraj said, 40% of our labor force is Vela in some way or the other. So what the problem is really, in how does this land, labor, capital combine? What economists call total factor productivity, but you could also just call it entrepreneurship or innovation, right? And how does land, labor, capital combine? Essentially today, our labor is handicapped without capital and our capital is handicapped without labor. And there are only 3 interventions possible: fiscal, monetary, and structural, right? Fiscal, if fiscal deficits could make countries rich, then no country would be poor, right? So I'm not sure fiscal deficit is or fiscal spending is. Anyway, we went into COVID with 70% public debt to GDP. We're exiting COVID with 90%. So I don't think there's that much room there. Monetary policy, I still haven't figured out whether it is a placebo or a painkiller or a steroid. It's surely not a solution to India's unemployment. Now, structurally, the solution is more formalization, more urbanization, more industrialization, more financialization, and more human capital. You can't sort of view unemployability without viewing the context of our jobs. I mean, there are no such thing as poor people, right? There are people in poor places. An electrician who moves from Patna to Bangalore gets 4 times more salary. A plumber who moves from Nigeria to the US gets 25 times more salary. The same guy, right? So very often, even if you're skilled, if you're in Patna or Balasore, what is your wage premium going to be? So I think looking at unemployability without looking at the productivity of firms, there's a 24 times difference between our largest and smallest manufacturing firms. Looking at the productivity of cities, I mean, if everybody in India lived in Bangalore, India's GDP would be more than China, right? Bangalore's per capita is now $11,500. So you look at regions. I live in Bangalore, Karnataka. My parents live in UP. Both states have the same GDP, but in Karnataka, we have 1/4 the number of people, right? So I would be careful with framing the employability or employment question without looking at formalization, which is how many companies are formal. Financialization, credit to GDP ratio, which is 50%. I think China's 300% is wrong, but we need to take our credit to GDP to 100%. Industrialization, the only way to help farmers is to have less farmers. And the two shock absorbers of India's labor market, farming and self-employment, need to be replaced by formal, non-farm wage employment. And obviously, human capital. I mean, schools, skills, and college is a complex question. But the notion that you can create skills and then jobs will show up, or jobs, I mean, it's a chicken and egg problem, right? The only way which comes first, jobs or skills? And I mean, the only way to solve a chicken and egg problem is to become vegetarian, right? Do something completely different. And so I think it's a little silly to say, well, if you do the skills, the jobs will show up. If you do the jobs, the skills. So I would just say a structural program to increase the number of cities with more than 1 million people. We only have 52. To increase our credit GDP ratio from 50 to 100, to increase our formal enterprises from 1 million to say 20 million, to increase our manufacturing employment from 11% to 18%, but reduce farm employment from 40 to 5%. And obviously, you implement NEP 2020, which is really, we don't need to go into the details of school, skills, and college, but NEP synthesizes all those challenges. So instead of a 15-year glide path for NEP, let's bring it down to a 5-year glide path.
So lots of points there to discuss, Manish, and I'll pick up something which I also heard, Dheeraj kind of, Dheeraj talked about the fact that formal jobs, etc., haven't gone up, and Manish has clearly stated that it's really formal, non-farm jobs that one needs to create. Manufacturing, for instance, has been portrayed as the manna for the last 2 decades. And Manish, I did hear you saying 11% go to 18%. It just hasn't happened. Dheeraj, I was reading interestingly, something that you wrote about taking some lessons from our cricketing success, for our manufacturing. And I'd love to kind of hear you about that because, lots of intent out there, but not much seems to be moving. So, whether, as Manish talked about more credit, more formalization of cities, of firms, etc., how do we actually break the knot, to create better jobs?
Yeah. So I think very often, the debate around jobs happens at the wrong point. So, you're obsessed about jobs. Manish has gone, one step back, which is the right thing to do. I think you've got to go even one step further back, in the sense that ultimately, what is going to lead to the greater formalization, what is going to increase that manufacturing employment from 11 to 18. And, fundamentally, if you look at the lessons of the other countries which had surplus labor in agriculture and which manage the transition, it's happened really through large-scale manufacturing, large-scale labor-intensive manufacturing. So it isn't that India doesn't have manufacturing. The manufacturing which we've grown, which have become reasonably competitive, say automobiles or pharma, they're all quite capital-intensive, knowledge-intensive. We don't really have large textile firms, footwear, sports goods, the type of thing that China and the rest of East Asia grew on at the initial stage. So I think then there are several complex reasons for that. One of the reasons I still think, which is a problem in India, in the political economy, is that we romanticize the small. So, we always want to do something for MSMEs, and within MSMEs, MSMEs, micro, small, medium, most of those enterprises are micro. They're not even small and medium, right? So, and I think if you're talking about micro enterprises, they're not going to really deliver you those kind of quality, productive, high wage jobs. So I think we've got to stop romanticizing the small to start with. We need firms to grow to scale. And if you're talking about small and medium, then we at least need to talk about the German kind of definition of small and medium, not our micro definition. So I think scale is certainly one issue we've had over the years. Of course, I don't fundamentally think that capital or land acquisition may be a problem, but I still think the government has enough land. It owns enough land. It doesn't even have to acquire if it wants to do a reasonable amount of, large scale manufacturing. I think, it's just that we've got into this rut where both entrepreneurs and government, and entrepreneurs as well, given the incentive structures they faced over the years, they prefer capital intensive or knowledge intensive investments. If you look at the startups, is there a single one in kind of manufacturing as we knew it 20 years ago, old style manufacturing, which will create jobs for those farm hands? So I think we have not moved the needle at all. Where we have manufacturing, it's not the kind which will generate mass employment. But I think, we had certain ideas on SEZs and, Arvind Panagria, who was my former boss at Niti Aayog, used to talk about these coastal economic zones, a bit like China, that you create large clusters for labor intensive manufacturing. I think the window is still there. We may have it for another decade, but I don't think our political economy is oriented, and therefore our entrepreneurs are also not oriented towards creating that kind of large scale manufacturing in textiles, toys, or labor intensive thing. But I don't see it, frankly. If we don't do it, I see again a decade or two of struggle on jobs. You won't find any easy solutions.
No, agreed. And you mentioned textiles. It is actually one of the most labor productive industries, but for a myriad of reasons, it's just not been as competitive. Abhay, just again wanted to pull you in, and you did talk about what I'm hearing from Dheeraj and Manish is that formalization and in some senses you need competitive scale across non-farm sectors to be able to drive better jobs, better wages. Your reactions, views on this?
Yeah, certainly non-farm sector needs to be given an impetus, because what happened in the COVID times that we have witnessed ourselves, anybody who is having a non-farm employment, these guys got badly affected. Non-farm, even the migrant workers who went back to their native places, they were without the jobs, they were without the farms, and they were badly impacted. So that non-farm, businesses through industrialization is a critical aspect to the entire scenario, and we believe that it should be done. But now, like Manish said, that the industrialization is the key. Industrialization should be there because there is no shortage of land and capital and everything there. Now the question is, how do we do that? What has actually happened over the years? Either we create the new industries in the far-flung areas. This is one solution. This is one way of doing it. There is another way of doing is that the industries which are already existing there, could we develop the downstream industries out there? Government has not done anything, significant, wherein there is a huge untapped potential lying there to address the employment scenarios. Where the youth is there, labor is there, everything is there, industry is existing out there, but you are not developing the downstream industry. That is, I am talking about the MSME sector out there, in the far-flung areas. Had it been there, there wouldn't have been any need for the laborers to migrate to Mumbai and everything. And during the COVID, when they were packed back to their homes, they were totally jobless and suffered a huge livelihood losses. So my take and my suggestion would be, on a very practical note, is this: that the industrialization should definitely be there, but the lowest hanging fruit would be the industries which are existing in the far-flung areas, like in the tribal areas or in the remote areas, which are already existing. Government should come forward, facilitate the downstream industry to flourish and develop out there, which can consume the local manpower and create millions and millions of employment out there.
I mean, I just wanted to come in here because, you can't take jobs to people. You have to take people to jobs. It's a dream that doesn't die. It's very hard to create clusters. We don't understand how clusters get created. Everybody's trying to create Silicon Valley. Everybody is, and everybody fails at it. And I would say that when you say the role of the government is not to set things on fire. It is to create the conditions for spontaneous combustion. You know, we've seen the industrial policy movie before, and it was a horror movie, and it didn't really end well. And so my submission would be, it's not as much as what the government needs to do, it's also what it doesn't need to do. You know, we have 67,000 compliances, we have 6,700 filings. We just put out a report which mapped out 26,410 ways to go to jail. You know, and the star in that movie is the Factories Act, which has 700 provisions to go to jail. So it's not clear to me. So there is such an apartheid between service businesses, jail provisions, and manufacturing jail provisions in India that it just makes no sense for somebody to really, because in political imagination. So I would submit that let's talk about the sins of omission, what things that the government doesn't do. But the sins of commission, with particularly this regulatory cholesterol, has to go. You cannot have 26,410 ways to go to jail in our employer compliance code. And I think that, so I would say, let's not try and take jobs to people. We take people to jobs. We don't have a Chinese New Year in India on Chhat, Diwali, Eid or Christmas. I mean, the only place where you see that is Kerala, which is 9.5% Bihari now. Right, they sent 9% to the Middle East, so they brought 9% from Bihar. But you know, we need to really think about this imagination of taking jobs to Balasore or Kanpur, or the kids from Balasore and Kanpur to place where jobs are. And let's be careful about our expectations from government. The government, if it does primary education, if it does primary healthcare, if it does law and order, and it does a bit of infrastructure, we guys are smart enough, we will do the rest.
No, you're right. And Manish, this is about, you're saying, actually creating the conditions for, you know, entrepreneurship, spontaneous combustion to happen, right? And you know, the other point that came to me is that, let's say, I was reading, it's not whether the government is risk averse or not. It seems to be that people and different stakeholders are equally risk averse. And I don't know, Dheeraj, whether, you know, you talked about this, that some of the farm laws that were, you know, taken to, you know, implementation, etc. It seems that, and they could well have been, you know, if not entirely, at least partly in the right direction. But there again, you know, there was a lot of risk aversion, and frankly, not from the government side, right, but from other stakeholders. And I love the fact that you talked about, you know, omission and commission, and we don't want to spend a whole lot of time discussing about, you know, what our government should do. But, you know, I would love to kind of pick up, you know, some elements around, you know, this entire issue of maybe skill development, right? And I know, again, you know, this is probably trying to feel the same elephant in different ways, but going back to employability, and Manish, I did hear you say that it's not a question of skills versus job, what comes first. But I know that this is one area that you've been spending a fair amount of, you know, time on. And your thesis saying that employed learners really need to, you know, outnumber, you know, full-time learners. What, in some sense, I mean, and that's learning for what? I mean, do you see ultimately the demand happening in services? If manufacturing continues to be, you know, the next big thing always around the corner, what kind of, you know, how should we actually be thinking about, you know, this entire learning and skill development?
No reasonable person will buy a plane ticket for 10 years from now, right? Because they know that everything will change. More importantly, any airline stupid enough to send you a ticket for 10 years will probably be dead in 10 years, right? But there's not 5 minutes in a skill development meeting before some well-meaning soul says, let's predict where jobs will be 10 or 15 years from now. And that's complete waste of time, right? Because nobody knows where jobs will be. I mean, very few people in the last 75 years would predict that 5 million Indians would be writing software code for the world in a country with a per capita income of $2,000. I mean, last year we exported more software than Saudi Arabia did oil, right? And that would be impossible to predict, either in 1947 or 1991 or even in 2001. So my submission is, in our employability, we need to, rather than predict, we need to make the system self-healing. And so there are 5 design principles: learning while earning, learning by doing, learning with qualification modularity, learning with flexible delivery, and learning with signaling value. At least that is what I have learned in the last 20 years. Learning while learning is important because we have too many poor people who, unlike everybody on this call, they couldn't choose their parents and their PIN code wisely. So they can't pay for their education themselves. Learning by doing, because soft skills are not taught, they are caught. And soft skills is where the wage premium is moving. Everybody is developing the hard skills, right? Because of rising literacy. Learning with qualification modularity, 3-month certificate, 1-year diploma, 2-year advanced diploma, 3-year degree need to be multiple on-ramps, off-ramps, but social signaling value of education. Michael Spence got his Nobel Prize for that, and I recognize it, right? I mean, IIM Ahmedabad is a good place to be at, but it's a better place to be from, no? Or Stephens or whatever, two of you are there. So learning with signaling value, I mean, learning with signaling value is important, right? And an online classroom should be equal to an on-site classroom, should be equal to an on-job classroom, should be equal to an on-campus classroom. So I would submit that the way we should stop thinking about employability by saying that we will predict where jobs will be and then we will work backwards from that. Let's make our system self-healing. Apprenticeships are self-healing, right? Because they're demand-driven. Classrooms tend to be supply-driven based on the teacher you have and the curriculum you have. So I think there are design principles now for an economy of the 21st century, which changes much faster than an economy of the 20th century. And that can be used. And I think we're sort of, NEP captures a lot of that, but obviously there's other things that we need to do. I mean, we must recognize we can't teach people in 3 months or 3 years what they should have learned in 12 years. So one of the worst things about India is we only have 45% of our kids left in government schools. I think that we have to change if we want to fix employability, because only 5% of kids in Japan go to private school, only 15% of kids in the US go to private school. So if something should be at quality and free, it has to be government schools, and that cannot be only 45%. So you have to fix the school system, you have to make the skill system self-healing, and you have to expand the higher education system in ways that massify and vocationalize it. Obviously, IITs and IIMs are very important, but they're rounding errors in our total numbers.
No, absolutely agree. Dheeraj?
Yeah, I think just a couple of reactions. I don't think I can give you more insight than Manish on skills. But I mean, one thing I think it's human. We can all see jobs going in certain sectors, but we don't see where they're coming. So I think partly motivates us to try and speculate where they're coming. But I agree with Manish. It's not possible. Because I mean, if any of us had that foresight, we wouldn't be sitting here. We would probably be sages of the highest kind. So I think yes, we see jobs being this, but that's happened with every industrial revolution. It's not new, and each time I don't think you could have predicted beforehand that this is where the jobs will come. So the jobs will come, but yes, I agree. Soft skills, learning by doing, all of that is very important. The other very curious phenomenon related to jobs that I see is that whenever you have these government advertisements for class 4 jobs or class 3 jobs, to secretarial or even lower, you have a huge number of people with BAs, MAs, PhDs, and all of that apply. Part of it is because the government job still is it's the ideal job for a lot of people because it encompasses security, benefits, all of that. But I think there's a slightly larger problem with skills. I don't know how you solve it easily, but I think the Indian society prefers white collar jobs, and that's why this rush for any type of government employment, apart from the fact that you have benefits and so on. But a skilled electrician or a skilled plumber in Delhi or Mumbai or Bangalore would probably earn much more than a government PM, over his lifetime. But somehow the respectability, the societal stamp on doing a government job, a white collar job is higher. So I was wondering, and maybe the others have a view, if vocational education could be upgraded or given some equivalence with a university education. You go to skills university rather than a vocational program or a diploma. Can you get a degree there? Because I think again there's a certain society bias which also prevents people from going to manual skills, even though it'll give them much higher returns than one of those class 4 government jobs. So maybe even in terms of thinking about skills, the entire packaging as well, making it more appealing for people to go in there, and so that they have as much respectability and higher earning than in a lower level government job.
Got it. Abhay, reactions to that? I mean, given given your NGO works with a lot of kind of as you said, non-farm kind of workers in such sectors, any views on what Manisha and Dheeraj are saying? Especially, let's say, Dheeraj's point around, giving the right kind of societal status to a number of different vocations?
Well, what Dheeraj said, that vocational education needs to be given a push. That's very important. But I want to put another perspective to it. It again connects with the employability crisis. This is again an objection that I have. With the formal higher education system in India, the kind of educational institutes which are mushrooming in every nook and corner of the country. You will not see even a single highway which is not full of management and BTech institutions, and and turning out lakhs and lakhs of students, MBA students and BTech students, every year. And when they appear for an interview, they are they are totally waste of money. What is happening? So my point is this: that some kind of regulation should be there on the education system. It needs to be reworked and reframed, and it should be replaced with the vocational things. Because I'm not against MBA or BTech, because doing a BTech or MBA from a third grade institute is worse than anything else. Because what happens there, the boy spends a couple of lakh rupees of their parents' hard-earned money. He spends 3-4 years out there. And when he passes out, his expectations are very high, and finally he gets a job what he would have got without doing that degree. Ultimately, he lands up an MBA from a third grade institute. Ultimately, lands up in doing a sales job and credit card selling kind of a thing, which he would have wanted also. So the point is that, so for the education is concerned, my point is this: that in order to address this employability crisis, it is very critical and important that the vocational education, some applied skills should be imparted to the candidates, students, so that at least they are employable. They save a lot of time on education, on the third class degrees, which are nothing more than the business houses. They are minting money. They are not the third class institutions on the face of it, because their buildings are very huge. Nice building, nice infrastructure, but ultimately the quality that they produce, the quality of education that they impart, is absolutely not at par with the established and reasonable institutes, raising their hopes and expectations, and again adding to the employability crisis. Ultimately, it is on the numbers of graduates. It may add to the literacy rate of India, but ultimately when it comes to the employability, it doesn't add any value to it. It's of no use. So my suggestion, rather my submission, would be that if we could somehow, put some kind of regulation on these, institutions wherein they are pushed to bring some vocational studies, courses, and get more focus on such, application-based, course curriculum, that would be nice, and that would somehow address the, the issue of employability. It's not that I agree with you, some of you, that it's not a question of jobs. Jobs are there, but in many circumstances in the urban areas, you don't find, right skilled people out there. I would want to share with you, some statistics which this what you call it QES, Quarterly Employment Survey of 2021. There are vacancies in many sectors, but the vacancies are unfilled. You know why? The reason is this: that these organizations, these firms, are not able to find the right skilled manpower for themselves. Like, for example, manufacturing, 19.5% vacancies are unfilled, and they say they have been surveyed, and they admit that they are not finding the right skilled people out there. In construction, 24.5% vacancies are unfilled. They are not finding the right skilled person out there. Jobs are there, but what? The employability crisis. This is what the employability crisis, because they are not able to find out the right skilled people for the right job, for that job. Similarly, for trade, 24%, hospitality, XYZ%, and like this. So jobs are there. Employability is a big crisis, and here education, quality education, plays a very, very critical and important role. And my submission to the government, my urge to the government would be that, Skill India is an excellent concept. Fine, very good, fine. But why can't it happen at the college level, education level?
I think Manish is arguing for even earlier, the school.
No, but can I disagree at 5 different levels with what Abhay said? I mean, the world has produced more graduates in the last 40 years than the 800 years before that, when college was invented in Bologna. 60% of taxi drivers in Kuala employer now have a college degree. 31% of Walmart checkout clerks now have a college degree. 15% of high-end security guards. So I'm not sure why you put college on the pedestal that it is, or why do you even say that, why do they want college? You know, vocational education is usually for other people's children. It's not for our children. So because of the social signaling value. And secondly, why are you raining on these engineering or MBA colleges? They went from 5 lakhs to 18 lakhs capacity. They went back down to 11 lakhs because IT didn't expand. Now they're going up to 15 lakhs. So 30% of engineering colleges and MBA institutes in this country are either empty or in the process of being shut down. So I would be careful. India's IT industry has been created, its people supply chain is created on this elasticity of the 17 lakh engineers which we went to. Then there was a slowdown between the global financial crisis and COVID. So it went down to 11 lakhs. Now it's gone back up to 15 lakhs because IT employment is going from 5 million to 10 million in the next 10 years because of the COVID digitization super cycle. So I would be a little less prescriptive. And what you're prescribing is MCI. The Medical Council of India tried to control quality by controlling quantity, and we only ended up with 50,000 doctors. AICT took a different view that let competition run wild. And, engineering institutes like RV, BMS, many in Bangalore were not born adults. They were not born with good quality, but over the last 15 years, they have become the people supply chain for IBM, Wipro, and others. And the ones which are bad are shutting down. So I would be a little careful in the government's ability, which you're asking for, to decide what is good quality and who should live and who should die and whether we should direct them to vocational training. It assumes a level of capacity, knowledge, and competence that I don't think we have seen either with AICT or with UGC or with MCI.
All right. Gentlemen, let me just try and bring this back in the last few minutes of this panel discussion. We've covered a lot of topics, but to just summarize, and then I'd love to get concluding views or actions from you. We started with defining, saying that this is really in this panel's view more a wages and to an extent an employability problem, not a jobs problem. We also discussed the fact that if you look at all the factors, land, labor, capital, all of that is available. It's a question of really finding that, getting that to work together to create the conditions, for more formal, non-farm jobs, etc., to be created, and you really have to let that, flow happen as opposed to direct it. We did talk about, then skills and employability. We talked about, Dheeraj, to your point about saying, let's not romanticize, small, we need scale, we need competitive industries. We do need, more labor intensive industries as opposed to, the capital and knowledge ones. Manish, your point around, the regulatory cholesterol, which is in some senses clogging up, whatever entrepreneurial, juice we may have in our veins. But given that, and I'm sure, the great thing is you guys do have different views, but if you were to then, Manish, I'm still struggling to figure out, what therefore are the 2 or 3 key steps that, whether it's the government or is it individual firms or us as individuals, need to take, because how do we actually start getting that combination, together? So, just in concluding remarks, if you were to say, from each of you on the 2 or 3 kind of important steps that either corporates or the government as stakeholder or us as individuals, as participants in, either the labor or the capital market, that we need to do.
I think for me, and I'll be very short. I think ultimately, for me, it's about competition and creating a cost-competitive economy. There's unfortunately no shortcut around that. I mean, the government can make somebody live for 5 years, but eventually, as we found out in pre-1991, people would have to die if you're not competitive. So I think instead of creating more inefficiencies, more interventions, I would opt for the less intervention, more efficiency route. At least let the entrepreneurial class create, world-class industries, particularly in manufacturing on the one side. And I think even on the skills and, education side, rather than more regulation, because we've seen enough regulation. I mean, we've tried everything in terms of regulation. We haven't tried enough in terms of deregulation. So I think both in the education universe, let many flowers bloom, let there be competition. I think quality can come out of competition as well. It doesn't necessarily come out of regulation all the time. And as I said, even if in skills, if you've got more competition, people giving higher signaling value, creating better institutions, which give you degrees maybe, or certain other frameworks, maybe in that sense, some kind of regulatory interventions, but not micro regulatory interventions. I think you got to just create a competitive economy, a cost competitive economy. I think services is reasonably good, but on manufacturing, definitely a lot of work to be done, as well as skills and education. I think again, competition is a force for the good. Government need not be ruled out of it. Let government schools also compete. There's no government schools or government vocational institutes. They can also be part of the competition. But ultimately, I think competition is what will deliver us quality and an ability to create a world-class economy. I think in this world, you can say deglobalization after COVID, after Russia, it's not going to deglobalize. Not going to go back to the way it was in the 1950s or 60s. We're going to live in a global world, and unless you're competitive globally, you're not going to create institutions or employment which will meet the aspirations of your people, because the aspirations of your people are going to be global.
Understood. So competition and is in some senses the disinfectant that we need to actually have. Got it. Abhay, thoughts from you, and then Manish, I'll let you have the last word. On the panel. Abhay, concluding remarks and suggested actions.
Well, I would like to share with you, some solutions. As I look at this problem and how do I see a resolution to this issue. Since I have been interacting and I'm working with the micro enterprises mostly, MSME, according to me, is a very vast area, big area, which includes medium, small, and micro enterprises. So particularly, I would like to focus on the micro part of it. When I say micro part of it, I would want to focus on the industries, entrepreneur, a one-man show kind of enterprises, which are millions. If you look at the bottom of the pyramid, the micro, constitutes a major part of it. I'm talking about the enterprises which have a paid-up capital of 1 lakh rupees, 1.5 lakh rupees, and it starts operating, doing business in whatever environment we are, in whatever regulations, regulatory framework we are. It starts operating business, and it gets choked after a while. If he needs funding, he goes to a bank. No matter how much Mudra Yojana you run, I have no doubt many might have been benefited with this Mudra Yojana, but how many have been refused this facility? Nobody wants to talk about it. When you go to approach a bank, they ask for your financial credentials, collateral value that you can mortgage in order to procure a 10 lakh rupees of loan. Right? So my submission would be that this particular facility of loaning, and sort of facilitating that micro enterprise should be deregulated. It should be eased out so that a small enterprise, because a small enterprise has a capability of engaging at least 5 people. A small startup, educated by a house lady, an educated lady, who due to any reasons, even it could be a MBA graduate or BTech, because of certain compulsions, she can't take up a regular job. What she wants to be an entrepreneur woman, start a small manufacturing unit of, let's say, garments or maybe pottery or whatever. When she approaches the bank, she is refused because her loan approval is based on the credibility, financial credentials she has to prove. If she had all such impressive financial credentials, then probably she wouldn't have been required to, go taking a loan from the bank. So my concluding remarks would be that if we want to address the unemployment situation in India, we will have to look at the unorganized sectors, micro enterprises, which constitutes a major part of it. If you look at it, even in the urban sector, one of the reports says that 98.05% of the total, estimated employment, they are employed in the form of employees only, right? And only 1.95% are the self-employed people. So my concluding remark would be that this 1.95% of the self-employed people, this numbers needs to go up, because self-employment is, according to me, is the best sustainable, workable solution to the unemployment problem in India. because it's a country of 130 crores.
Right.
Whatever Manish ji and Dheeraj ji have said, all fine, everything is fine, industrialization, this, that. But we need to take very, very small steps, baby steps. Micro industries can't be ignored. You can't ignore it. Now, just to come to think of it, unorganized sector, wherein it employs 90% of the people.
Got it.
Now come to think of their kids, their education, their aspirations. Everybody is tempted to do attend a college, BTech. Father is accumulating wealth. Somehow, they are arranging for their education, and ultimately he ends up, doing a petty odd job. So that is the biggest story. Then the rural development is another key. Developing an industry.
If I could request you to speak it briefly. Yeah.
Sorry, I took a little longer than.
So that's fine. If you just want to very quickly conclude your point on rural, but very briefly, and then we can move to Manish for his concluding remarks.
Yeah, rural is what I am saying, that rural development is again a key to the unemployment, because there, you should create some industries, or those industries which are already existing out there, you should try to create downstream industries out there in the far-flung areas, because that will create a lot of untapped potential. It has a lot of untapped potential, and a lot of enormous job opportunities can be created at the doorstep.
Got it. Okay, perfect. Manish,
my view is that Indian entrepreneurs are ready. What the context is, we need the government to do less so it can do more. We need the government to focus on human capital. We need them to focus on healthcare. We need them to focus on infrastructure and focus on law and order. Obviously, this ease of doing business rankings, our rankings were going up, but our daily life wasn't changing. So I think the ease of doing business, if we look at it from a pure employer perspective, the rationalizing, digitizing, and decriminalizing this 67,000 would be a one-time exercise, which could be fantastic in creating the spontaneous combustion. Finally, it is human capital. I mean, I would agree with you that it is a 21st century economy is built on human capital. When as you said, we're 138th in per capita GDP, and we'll probably be third. We'll cross Japan and Germany in total GDP in a few years. But our daily lives, as COVID reminded us, is really influenced by per capita GDP. And so if the government raises, what is the strength of a country in the 21st century? Ramdhari Singh Dinkar is one of my favorite Hindi poets. He says, Shama Shobhati us bhujang ko jiske paas garal ho. Only snakes with venom can be kind, benevolent, and generous. And in the 21st century, inner strength is really human capital. So I would submit that NEP acceleration, but human capital is obviously linked to healthcare quite substantially. And so the government should only do four things. It should focus on law and order, it should focus on infrastructure, it should focus on education, and focus on healthcare. And we will use that very fertile habitat and create a lot of jobs and reduce farm employment and hopefully reduce self-employment, because most self-employment is self-exploitation.
Okay, great. No, so thank you all. I mean, a great set of, prescriptions for, what the government should do and what it should not. And I think the overwhelming view is to kind of, in some senses, enable, conditions for, both better wages, better skills, better jobs to be created, right? So it is, again, maybe something which is familiar to all of us, that maybe, most of the solution is probably known or understood. It's really a question of, just getting down and doing it. But thank you all, gentlemen, for your time. Thank you for the engaging discussion that we had. Thank you for, the different views and perspectives that you brought to this panel discussion. And, have a great day ahead. Thank you very much for tuning into ET India Boardroom. Stay tuned for more.
Hello and welcome to ET India Inc. Boardroom. We have a panel on which we would be discussing how India can become a more equal country. And we have on this panel Dr. Arvind Virmani. He's a former chief economic advisor to the government of India, and he is now the president of the Ego Foundation. Thank you so much for joining us. We've just seen your report and I mean the paper which came out. And I want to begin by asking you on the, estimates. You have used extrapolation from the consumption survey. Now, there have been a lot of, reports and estimates that we have got, which say, poverty was in fact higher. So, what do you have to say about this? How do you sort of justify the numbers? I mean, the extrapolation bit that has been done in your study.
So one is your broader question and then the details. So the broader question is, how is poverty measured? Well, there is a standard methodology which has two parts. One is that the first preference is if there is a proper survey conducted in the same way as it has been previously conducted, and there are well-defined methods of doing it. India was one of the first. US and India were the two countries which started surveys, consumption income surveys, the first in the world. So that is all standard. That is the preferred method. Generally, surveys are done 5 to 6 years apart. The second part of it is when, for periods when the survey is not available, given that it is so infrequent across the world, there is again a standardized projection methodology. The details we'll get into in the second part of the specific study, paper or analysis. So that is based on the last available survey being projected forward in various ways. Okay, there is a standard World Bank method. In our paper, we use both that method and for reasons which we can discuss and which are all given in the paper, we've also given the results for what we think is our preferred method, along with the standard World Bank and other methods. So that is the overall picture. Now we can get into the details as usual.
So basically, during the pandemic, most estimates, most papers have, they have said that, poverty went up.
Right. So during the pandemic, the first thing to note is that what kind of survey. So the survey we have used for projections is 2011-12, which is a detailed survey. People who don't know about surveys, they are like 100 questions. Okay. There could be 30 questions on food itself. Okay. These are all detailed, noted questions. So there's a big amount of detail in each of these surveys. And what the people who are talking about in the pandemic, there is no such survey in the world as far as I know during the pandemic. So you could ask, what are they doing? Okay. Well, some of the ones which I've read were talking about telephone surveys during the pandemic. There was no way of going out there and meeting people. It's a completely different thing. We have no idea what the methodology is. We have no idea how comparable it is. So first essence of if you want to do a time trend, you must have a comparable survey. To my knowledge, there is no comparable survey compared to any standard survey. I'm not talking only about India. Yes, definitely about India. But if you take any other country, the best surveying countries in the world. So, so definitions, etc. If you get to individual thing, I can reel off a whole bunch of things which are different. Let me just start by giving you a little picture of what. So one of the important things we have done is which is our criticism of the World Bank, is that they use what is called the unit recall method. In the 2011-12 poverty calculations, we switched over. Before that, actually, well before that, we introduced something called a mixed recall period. Now, it turns out that I was there even before this method was introduced, and I had argued strongly. And again, depending on time, we can go into the details of why this mixed recall period was better. But this was done between 2004 and 2011. The 2004 poverty calculations were done under my, while I was in charge of that particular division. So again, we can discuss how that was done. in 2004, which is generally 2 years later. So 2004 would mean in 5 or 6, this calculation was done in the PPD division, which I headed at that time. So, so the first way we differ, though we give the uniform recall method and the mixed recall exactly for the reason it gives us approximately 10% lower poverty number. So that is one thing with respect to the standard World Bank methodology. Second way in which we differ, and again we give 2 sets of results, is that we use both the national accounts. And again, if you have any doubts on that, please ask the questions. Because some people have raised we don't understand what we have done. Okay? So if you have any doubts, please ask them. And the second is we, for the, as far as I know, we've gone down for this projection method. We have gone down into the states and looked at in detail the SDP numbers which were available and used those nominal SDP growth rates also. So both these kind of calculations we have given. So 4 many different calculations, but these 4 we have given in our thing, and our preferred one is the PFCE with the mixed recall method, which is what we have been discussing.
Taking forward, you know, what you've said, so the paper also sort of alludes to, you know, reduction in inequality. Essentially, but what we've seen is that, you know, the upper income group during the pandemic last 2 years, they were the least hit, and inequality in fact increased anecdotally also, and there have been multiple reports also. So you know, why is there this divergence in what we've been sort of seeing and the paper?
So again, it's very important to go into the details. So let me first talk about our calculation for inequality. So in the World Bank method, they apply whatever the growth rate, you know, they apply the same growth rate across all individuals. Okay. What we have done is we have applied CPI numbers, not the national accounts deflator. The CPI deflator, CPI by urban, rural, and across, you know, 20 whatever 9 states and UTs which are there. So in the conventional World Bank method, there will be no change in distribution because they would use the 2011-12 distribution and project it forward and calculate the new poverty numbers. Okay, because the same growth is applied. What we do is we calculate a different real growth rate applying CPI numbers. So our distribution actually changes. So that's another thing to note. This is very unique. This has, again, not been done very often. Okay, because given our federal structure, we have 29 states. You know, if it's a unified country, it doesn't make any difference, but we are getting different real growth rates implicitly. You know, the exact detail, you don't want to get into the nitty-gritty, but so effectively we are able to get a change in the distribution. So what does that show? Okay, so and why is it different from other estimates you have seen? So let me get the table. Sorry, I got it somewhere here. So okay, here we are. So what we show is that the distribution from in 2004, the number was 31.3. It was more or less the same, 31.3 in 2011. So no change in the inequality as measured by the Gini. In 2019, it was a little higher, 31.4. We don't say that it has gone down by 2019. In 2020, it's even a little higher than that, 31.5. If you just go by the standard methodology, what we have shown is that when you account for in-kind transfers, this changes radically. So that's a second or third or fourth, I don't know, which big result of ours, that in-kind transfers in a situation where the GDP declines by 6.6%. In normal conditions, there may have been not so much an effect. In these conditions, there was a substantial improvement in the Gini coefficients, 1% point, because the base Gini did not change much. I just gave you the numbers. It only changes in the first decimal. But when you take account of the food expenditures, the free food plus the subsidized food was given, then the inequality changes in the pandemic period. That's if you're only interested in the pandemic, that is what the results show for the pandemic period. I should just add, by the way, and again, I won't go into the detail, I'll leave it on the table if you want to ask more. I have done a simple calculation for inequality from the Rural Wages Survey, which is again a standard survey. And I can talk about that, what that shows.
Sure, sir. So I'll just come to that in a bit, but I just want to, you mentioned how, the food transfers really sort of changed the whole situation. So they did bring about a reduction in overall poverty. Now, what I want to ask you is, are these the most effective, and are these sustainable, these measures, given that, the government has fiscal constraints?
Right. So first, your direct question, but just on the side, I want to mention that people have that we are talking about absolute poverty right now. We are talking about absolute poverty. There's also lower middle income poverty and upper middle income, which we have not addressed because it was not relevant at this point, which is 5.5. We have not talked about that, 3.2. Again, some people seem to be all confused about this, so it's very important. So what the, just the results first, what it shows is that food transfers offset the decline in poverty, which did happen, and offset it. So we came out more or less even on absolute poverty, but was still lower on the other poverty we have calculated. So it's all transparent. There is nothing hidden. Some people have attributed motives to us. In fact, one politician has called us a liar. I mean, very strange. Okay, he clearly doesn't understand the paper. So 3.2 poverty, the numbers are there. It offset about 20%, if I remember correctly, but that poverty increased during the pandemic. So nobody is saying here that that pandemic wasn't a big problem. Now, food transfers. So what should they be continued? I think that's your question here. So
yeah, basically, these, we've seen how they impacted. We've seen actual, in reality how they impacted. So are these the most effective? Yeah. And are they sustainable? Because we know it has a large fiscal deficit.
Yeah. So here is my position. My authors may differ a little bit, co-authors, so I'm speaking for myself here, but more or less in agreement. So my view is that we were, lucky that in 2013-14, the Food Security Act was passed, and which was more or less in place by 2014. And then the Aadhaar and other efficiency measures had made this very effective by the time the pandemic occurred. So, in the Food Security Act, it already was giving 50% of urban population and 3/4 of rural population subsidized food. So during the pandemic, what the government did was to add another 5 kilograms, which was completely free, okay, no charge. So and one of the reasons, important reasons, which for doing it is because we have huge accumulated stocks of wheat. So clearly in that kind of situation, it was a bold and correct move, in my view, in hindsight. Frankly, I can admit, I think in one of the programs you were there, I was talking about cash transfer and mobile payments. Why? If you remember, because there was all this problem about migrants. And I was saying if we had a cash transfer system based on mobiles, they would have been able to get whatever subsidy wanted to give them right away, whether half the families in urban area, rural area, whether they are traveling, etc. I still believe that is the correct long-term approach. But first, acknowledging that in the current situation, it was necessary. Perhaps government has, and it was going to end in March, government has decided to take it to extend it to September. I think it makes some argument is there, because even though the economy is now back to around 2 to 3% above the 2019-20 level, there may be pockets of people who are still kind of, who suffered from pandemic and back on their feet. So, okay. But I do not believe it should be extended beyond September. And really, the long-term solution still remains, in my view, a cash transfer system. And I have made many proposals about that. We can go into details about it,
I think pandemic was an unprecedented where, because
it's a once in a century situation, which is very, very unlikely to occur again. So in my view, actually, even the Food Security Act should, over the next few years, when we switch over to this other definition of poverty, maybe reduce the eligibility further and focus resources on the cash transfer system.
Also, since you talked about, the definition of poverty, changing the criteria, from 3.2. So, what kind of policy implications, does that sort of hold?
So, what are these, the poverty indicator, what does it tell you? One is it's a summary measure of marking progress, okay? So given that in our view, we are virtually at zero in 1.9 or absolute poverty. By the way, again, just an aside, some people think we are using just the international. No, we have used the detailed cross-state, urban, rural, Tendulkar poverty lines in our study, okay? So anybody who says that, oh, you're just using international, that is just not correct. Now, so why go over to three? So our study shows that we were, in 2019, we were down to about 17, 18% of that level, right? And so as soon as the pandemic is over, we are likely to be back to that. So it's a better way, right? So of measuring further progress, because if you keep using the absolute poverty, you're not really measuring progress. I mean, if you go from, let's say 2 to 1.5, what does that tell you? It doesn't tell you anything. On the other hand, the objective which should be that this 17% should also be brought down to 2% by, let's say, 10 years or 15 years. So it's really a measure, a way to keep ourselves in our toes and measure how effectively our growth processes, inclusive growth, etc., is working.
Right, sir. So if I can come back to you on the cash transfer bit that you mentioned, and saying that, that is the most effective. Now, we currently, if you look at our architecture, there are multiple schemes which are there, state, center, different schemes, different, there is a cash transfer also, which is there. There is a food scheme, which is there. So is there time, is it time that, India looks at, an income transfer, a universal income transfer, or even, just a basic income transfer scheme?
Right. So there are 2 or 3 points which come from that. First, you're absolutely right. There are multiple schemes across the country. And again, to put it in historical perspective, India was the first country to start something called poverty alleviation in the 1960s. So we've had tons of these poverty alleviation schemes. And certainly, you're absolutely right. When absolute poverty is eliminated and we move on to this new measure, it's time to rethink that whole structure, in fact. Just another little fact that you said multiple of schemes. The last time, which is now pretty long ago when I was in government, I measured there were something like 250 different central and state schemes. And I remember arguing with people that the district collector, he cannot even focus on like 3, 4, 5, 10 schemes. He's in charge of all 250 schemes in the district.
True, absolutely, absolutely.
Easy. I mean,
yeah.
Sorry for the strong words, but okay. So what is the solution? The solution is what I have suggested. Yeah, I'm going to answer your question. It's something which I've called a welfare stack, okay, which is a 3-level thing. One is a internet-based, just a portal which has all the state and central government schemes for which, let's say the bottom 50% or the bottom 75% of the population is eligible for. Okay, so that is the first. The second part of it is exactly this mobile-based Aadhaar connected system. And then there are other elements of it. Again, we may not have time to go into those. but I 100% agree with you that I think now we must seriously think. There are also other variations. For example, but this would come subsequently once you reform the system and integrated all these different schemes into a single scheme. You know, we already have that Pharma 7,000. All these could be integrated into a single cash transfer, which has different attributes. Single doesn't mean everybody gets the same. You can feed in if you really want to give a differential, let's say, to SC, STs, but that could all be in the formula. And once you have Aadhaar connectivity, it's simple, you know. So let's say I'm SC, ST and somebody is some other caste, I could get 10% more cash transfer. There's no problem with that. So this, it's definitely now time to start thinking of this reform of the welfare system.
In your paper, you know, there is a commentary on the social safety architecture, you know, how it has helped sort of withstand the income shock. Now, there has been criticism, some criticism from some quarters about, you know, social safety architecture, you know, it has been found wanting. So, what kind of changes do you think we really need in this architecture? And do you see a need for a change?
You know, when we let me go through. There are three points I would like to make. First, we must always remember that there is enough evidence from across the world in India that inclusive growth, the faster the growth is, the more quickly you are going to develop, everybody is going to develop. And then we add the inclusive, and I will just explain what that means to me. So fast inclusive growth has to be the primary objective. And, you know, in various places, one has discussed what are the policies needed, etc. Again, if necessary, one can talk about those. But the second and third part is the following. The third part is also, we have vaguely discussed that the cash transfer welfare stack, which will integrate the transfers to people, the welfare. The middle part is very, very important. It is what, I don't know, 30 years ago, I called public and quasi-public goods. Again, I was talking as an economist, but for simple public, you can think of it as public goods. So we have hard infrastructure, we have soft infrastructure. People forget that it's not now, but for 50 or 70 years, we've had a public health system, from primary health centers, secondary health centers to tertiary health centers. We have had a schooling system, which is, both these are virtually free. You know, we at a primary school level, health level. So that is the quasi-public goods, which I call. So clearly these remain important. It's very important to improve the quality of this infrastructure. There is a huge focus on hard infrastructure. A lot of been discussed. I need not go into it. But the same needs to be done of this. And here, just my personal experience. In 2006 it was, I think, that then Deputy Chairman asked me to do a review of the entire social sectors. And believe me, I came to the conclusion that we have tried everything except one thing. Okay, none of that stuff has worked. So I came to this radical conclusion, which I don't know if anybody read it or took it further at that time, was that the only way is to use modern technology, internet. Okay, the doctor, the nurse don't show up at the primary health center half the time, 30% of the time. If you had internet, you can sit in the capital city or the district center and provide education. If the school teacher doesn't show up. So same way, health, everything which doesn't require physical intervention, which is surgery, everything can be done on the internet. Currently, and again, there are studies, again, I don't want to take up too much time, some horrifying studies of how local people, you know, we can sit here and talk about public supply, etc. But local people, there was an actual study that they go to quacks, and 90% of that is totally useless. It's just a complete waste of money. Now just think, instead of that, if you could have an internet and a center there where people could, and there could be an intermediary. I'm not saying eliminate all intermediaries, but if even the intermediary was honest, he could look up on the internet, talk to them, and prescribe something by going over the internet. So to summarize, my conclusion was in a 1.4 billion population, there was no other way to get India's quality of education, health, and other social service anywhere near that of upper income, middle income or higher income, except to use this e-health, e-medicine, and e-learning systems. I strongly believe in that. I believe the message has gone through to the government, and I think the last budget gave some indication that they are listening.
Definitely. Even like during the pandemic, the health expense, the health spending, there were multiple reports which sort of showed that, they had, deepened the inequality to that extent. So, in your paper, you have, did you actually take the, impact of the health expenditures also? And
So
how that
let's
impacted during the pandemic years?
Let's get to the pandemic. Again, it's very important, that there is too much confusion. You asked me about all kinds of studies. There are three issues of inequality, and especially in the pandemic. There is a change in wealth distribution, change in income distribution, and change in consumption. In the thing I have read on media, there is no distinction. Everybody mixes up whatever he wants. And some of them even mix up long-term trends with what happens in pandemic and vice versa. So one has to be very careful. As a long-time academic, I mean, essence of good analysis and policies, we must be very clear what we are talking about. So just for your general reader, the things which vary the least is generally consumption. So let me give you a scenario of what happened in the pandemic. Again, I don't have all the details, but I have a lot of little connected data. So what happened in the lockdown was, during the 2 episodes of pandemic, what happens is that the income distribution, actually, there is no evidence, and I can discuss with you what evidence I have that it actually may have improved. But the wealth was a problem. So part of it was that wages, relatively higher wage people actually didn't go to work and didn't get paid. Okay, so the distribution actually didn't work, but they had lots of wealth. So they could draw down their wealth and maintain their consumption and maybe increase it even. The poor don't have that option. They used up all their extra savings, whatever they had during maybe the first quarter or 2 quarters. So they actually probably suffered. I'm waiting for the data. I don't have all the data on the second wave, that Q1 of second wave. And as soon as it's there, I'll be happy to talk to you about it. But I don't go on speculation, okay? So whatever it shows. So that is the problem. It's not that they had less income or there was an imbalance in consumption. It's really that this exhaustion of wealth, they could not afford. They've already reached the limit maybe within 6 months or so of the pandemic. While the richer people, obviously, and the middle class also maybe lasted 1 year, 2 years, and used some of that. And clearly, those who were actually affected by COVID were the worst affected. And those are the people really, which perhaps we were not able to reach that well in terms of compensating them in some way for what they had, including losing their loved ones, etc. So if I were to say that was one weakness in our response, was that we probably were not able to reach anybody. It's not a question of poor. It's poor, middle class, both taken together. So I think that was a bit of a weakness.
In terms of policy architecture going forward, we did talk about, having a comprehensive income support, but we've seen this pandemic, it sort of has changed the world. So in your view, would we require some kind of special interventions, to give support to people? Or because, we've seen food transfers helped, but going forward, should there be some more mechanisms to help, the other classes, say for instance, middle class?
So a couple of things. We've talked about the welfare stack, of course, that is directed toward, let's say, the bottom half, which already is getting lots of programs, scholarships, etc., which basically is the middle class. Let's be frank. There are all these little things which the middle class also gets, right? So one is that is integrating that itself will make it actually much better and much more efficient. But there is another thing which I have suggested. I mean, we independently, Bhalla and I suggested independently like 10, 20, 30 years ago, but we also wrote a joint paper. It's something called, I call a net transfer system, which is based on, on preserving incentives. So it's a longer term solution. I do not agree with this Western type of system. See, we have long been affected by a problem of corruption and tax evasion. So we have to devise systems which are suitable for our own condition, not just adopt whatever the West suddenly is very favorite and in fashion. So this net transfer system would build up a welfare part and then basically connect it to the income tax system. So in some sense, everybody would be protected on a similar scale. So just to give you a simple example, the lowest income person would get a minimum amount. Anything he earns over that will be taxed at, let's say, a 10% or eventually 20% rate. So he has a marginal tax, but his income keeps growing. There's an incentive to work. Also, it's protection. If you move back, you automatically get more net income is what it is. That's why it's called a net income transfer system. Okay. So there are systems which can be designed. We have proposed some. But I think I go back to your suggestion. I think really we need a debate. You know, it may be that the government and others decide that this is not workable. Okay, the one we have proposed. But you are absolutely 100% right that we must start a debate on these things looking forward into the future.
Right. Thank you so much, Dr. Vermani, for joining us and taking out time for this special session. Thank you so much. Thank you so much for joining us, and stay tuned to ET India Inc. Boardroom.
That's it from day one of ET India Inc. Boardroom. The key takeaway being that India faces tremendous challenges, but it's also in a good place to be able to handle them with the right policies and clear vision. Visit our website, economictimes.com, for more. That's it from me, Maloney Bhatt, and the rest of the team at ET India Inc. Boardroom. We'll see you again in the next track.